Hello students, this is your Mr. GST CA Vishnuvardhan. Yes, welcome to the most awaited video, the CA final IDT amendments applicable for your May 2025 exams. You know the USP from my side itself is simplifying the amendments in such a way where you can remember it for your exams. So without wasting much time, let us get into the video. First of all, understand there are really very few amendments, and here the chapter names I have gone through using the ICS study material. Okay, so ignore the chapter number, page number, all that stuff. Just keep watching the videos. Okay, so the amendments are obviously the few amendments which are applicable for May 25. We'll be discussing here. Now, please understand. I repeat, ignore the page numbers and chapter numbers. It may vary here and there, so don't worry about them. But this PDF will be shared to you in our Telegram channel, which is the link is given in the description. So focus on the lecture. Now, first one regarding the free replacement services and the goods what we are using in free replacement. What is the GST treatment? Okay. So first, if you see, understand, I am having a Honda car. Now, sir, there is a silencer issue for that. During the first year itself, during the free replacement period itself, so there was some issue with the silencer. So what I am doing, I am taking the car to the showroom dealer. So what showroom dealer is doing? Showroom dealer is replacing the spare part freely, and he will be doing it on behalf of the manufacturer or on his own, whatever it is. So imagine he is raising invoice to the manufacturer. That is the situation. So for me, there is no direct connection with Honda company. So I will go to the showroom dealer. Showroom dealer will ask the manufacturer to do the needful, but actual processing, everything, the free replacement, servicing, etc., everything fully will be done by the showroom fellow. Now here, first of all, first number one clarity, sir, free replacement they are doing. What about the silencer? See, the showroom dealer is using a silencer to provide free replacement. That means there is no consideration here. Because there is no consideration, we can say there is no supply. But please understand, when I am buying the car itself, that they would have calculated everything like free replacement, warranty, goods, servicing cost, everything, and they have added to the cost of the car and they have sold the car to me. That means even though they are saying it free replacement, technically it is not a free replacement because the cost is already recovered. So because already cost is recovered, now they are not charging anything. Because of that, there is no GST right now on this free replacement silencer, whatever they are using. On that right now there is no GST. So this is first clarity. Now, sir, they are using a silencer for providing some free service. No, sir. Should they reverse the ITC on the silencer? Not required, as I already told you, sir. No reversal of ITC required, because the reason is, even though they are saying it free, it is not technically free, because for this the consideration they have already charged. So fine. Now the part what they are using, the silencer, for example, free, on the GST implication we have understood. Now the next segment in this particular thing is, sir, this showroom person is doing this free replacement. No, for that he has to get the silencer from the manufacturer, right? So he is getting the silencer from the manufacturer. For that, what is the tax treatment? Let us understand. So what can be the possibilities here now? If you understand, see, first of all, the free replacement to the customer. Now, sir, when free replacement to customer is happening, first possibility, see, manufacturer is generally selling the spare parts to the showroom dealer, and showroom dealer is selling the spare parts from his showroom. That is their normal practice. Now, in such case, here silencer should be used for free replacement. So what the distributor is doing now? Distributor will be already having some stock which he purchased from the manufacturer and is generally selling in the market. That goods, that means his own stock, distributor is using. That can be the possibility. Okay. In such case, distributor, what he will do? He will use his own goods and will raise a fresh invoice for the silencer to the manufacturer, because he already purchased the silencer from the manufacturer. The same silencer he is using, but using this silencer is the responsibility, giving this silencer is the responsibility of the manufacturer. Manufacturer should give the silencer, so that the distributor or the showroom fellow, here in the example, will use it for free replacement. Here what distributor is doing, he is already having his own stock of silencers which he already purchased from the manufacturer. For that same silencer he will use in the car, and he will raise a new invoice to the manufacturer and he will charge GST. So ITC can be taken by the manufacturer on that invoice. Simple. This is the first possibility. Again, sir, he is using his own stock. own silencers and asking the manufacturer. Manufacturer might have sold 50 silencers earlier. Manufacturer would have raised invoice on the distributor earlier. Now, what the distributor will do? Distributor will not raise invoice on the manufacturer. Sir, you are a big fellow. On you, I cannot raise invoice. But you raised invoice on me. No, you sold me 50 silencers, right? On that 50 silencers, one silencer I am using it for Vishnu sir car for free replacement, sir. For that, please raise a credit note and reduce my liability. So that what will happen, sir, in this case also, there won't be any GST liability, but the distributor has to reverse the proportionate ITC. That is the second possibility. So I repeat, distributor is, that is the showroom dealer in our example, is using his own stock which already purchased from manufacturer. So he will use the own stock and raise a new invoice on the manufacturer for the silencer, so that he will charge GST and manufacturer will take ITC. Or he will ask the manufacturer, sir, you already sold me silencers, you gave invoice. No sir, the same silencer I am using here, so reduce that one silencer value, that means you credit note and close this transaction, sir, so that I will also reduce my proportionate ITC. So I will do the reversal of ITC. This is the one scenario. I mean, distributor using his own stock for doing free replacement. Okay. Next, second possibility is what? Manufacturer will send the stock, will send the silencer to use in the free replacement. So in that case, what will happen? That means he is not actually having any of his own stock or etc., whatever it is. Sir, manufacturer said, I will send the silencer, you do the free replacement. Then, okay, manufacturer is sending and distributor is using them. Then there is no GST implication because manufacturer is not selling it to distributor, distributor is not selling it to the customer. So no GST implication, nothing. Okay, here no GST impact. But already some goods, some silencers which you have already sent for free replacement, etc., manufacturer's goods itself I am having with me. Manufacturer silencer itself, like, sorry, manufacturer, I have purchased something out of my own stock, etc., I have some silencers with me, my own silencers. So what I will do, I will use my own silencers. Later on, however, manufacturer will send one silencer, no, I will take it in my stock. So there also what will happen, again, see, understand, there also no GST, nothing. That means, understand, manufacturer will send the silencer and I should use it. First, he has sent, I have used, no GST implication. Second thing, sir, he is sending, but I am not able to wait till that time, or customer is forcing me all the stuff. So what I am doing, I am using silencer what I am having with me. And when manufacturer is sending the silencer, now I am keeping it with me. So here also what? No GST implication, nothing. This is with respect to free replacement of the goods. Now please understand here one more interesting point is, see, we have discussed about free replacement. Free replacement provided to customer by the showroom. Sir, what is that we have understood? No GST implication, no need to reverse ITC. This is first thing we have discussed. Second thing, we have discussed about the goods. Whatever the goods you are using in free replacement, what is the tax treatment for that? That we have discussed. Now third thing, please understand, sir, the showroom dealer will not charge any consideration, for the customer. He said free replacement. Sir, when he is doing free replacement, he is doing servicing also, no? We spoke about the goods. What about the service element involved here, where the showroom dealer is doing the service for the customer of replacing that silencer? Now, in this case, sir, he will not charge anything to the customer, but he will charge it from the manufacturer. That means manufacturer will pay to the showroom dealer, that is the distributor, the cost for doing the service. Okay, that means now see, for example, sir, for dealer to customer, this is a free service, but dealer will raise invoice on the showroom, manufacturer, that is the Honda company. So now what Honda company will do? Honda company will pay to the showroom dealer, that is the distributor. Here in the examples, whatever I am discussing, Honda company I am taking as manufacturer, showroom fellow I am taking as distributor. Okay. Now Honda company will pay to the dealer. Clear? So now on that, obviously it is like the distributor is providing services to the manufacturer, so he will raise the invoice, and on that manufacturer, there is a Honda company will take ITC. Simple. Okay. So I repeat, we have discussed about what is the tax treatment for free replacement. Goods also we have discussed, service element also we have discussed. Hope it is clear, right? So this is the clarity with respect to this. So here you can just pause the video and take the screenshot for this, the notes. and next this one. Okay, so totally we have covered here. One second. So this is now perfect. You can take a screenshot. The material will be available in the Telegram channel. The link is given in the description, so nothing to worry. Hope it is clear, right? So with this we are done with amendment number 1. So completely the notes, everything properly here we have given. So amendment number 1 is done and dusted. So everything, the 4 situations whatever we have discussed, 1 2 3 4, so we have discussed. Okay, next we have discussed about the services also, right? Now we are moving into the extended warranty. Extended warranty, please understand here, extended warranty with respect to this. Sir, what is this concept now? Sir, extended warranty, see, when you are buying a mobile phone, sir, when you are buying a mobile phone, you know, they'll be giving some 1 year warranty. Sir, when they are giving 1 year warranty, like when they are selling, they are saying, sir, there is an extended warranty option available, sir, and if you pay 2000 rupees extra, we will give 2 years extended warranty, sir. So during these 2 years also, if your mobile gets, like the display gets broken, etc., etc., we will do free replacement. So you can understand, display cost itself is 15,000, 10,000, 25,000. So just pay 2000 rupees and get 2 years extended warranty, like that they are telling us. So normally 1 year warranty if you buy the mobile phone. Okay, you pay 2000 extra, you get 2 years extended warranty. In that case, for the extended warranty, what is the tax treatment is what we are going to see here. Sir, here the concept is again the concept is, understand that extended warranty, when it is given at the time of supply itself, sir. When I am buying the mobile itself, I am getting the extended warranty. Now please understand, this extended warranty, when you are buying, it may be provided by the supplier. That means I am buying an iPhone and the seller itself is providing me extended warranty. So 2 years you get extended warranty, sir, pay 2500 extra, I have paid. This can be one situation. Or there is a third person. Let us assume I am buying the iPhone through EMI, etc., etc., Bajaj Finance or somebody. The third person, whoever is there, he is saying, sir, you pay 2500 extra, we will cover extended warranty also. So when I am buying the iPhone itself, sir, I am getting extended warranty. Maybe the seller is giving it, or maybe a third person is giving it. In that case, we understand, if the seller is providing, for the seller it is a part and parcel of composite supply. So it will be treated as per the principal supply. That means extended warranty is also treated as sale of iPhone and charged accordingly. But if any third person like Bajaj Finance or etc., etc., if any third person is giving extended warranty, sir, you pay 2500 extra, will give 2 years extended warranty, all that. For that fellow, it is not a composite supply. Please understand that he is not selling the mobile phone, along with he is not selling the extended warranty. So it is altogether a separate supply for him. So it will be taxed as supply of service of extended warranty. Hope it is clear for you, right? So I repeat, when you are getting the extended warranty at the time of buying the mobile itself, or the time of buying the product itself, if it is provided by the supplier, then it is part and parcel of composite supply and taxed as per the principal supply. If it is provided by the third person, it is part and parcel of not composite supply, so it is a separate supply and it will be taxed separately. That is what the point. Imagine, after 1 week of purchase, after 10 days of purchase, after 1 month of purchase, you are fighting with your girlfriend or boyfriend and you are breaking your mobile again and again. So you have understood the seriousness of the issue. So you want to get the extended warranty, otherwise mobile next time it will break or not, your heart will break because of the display cost. So what you have decided, sir, after 1 month, after 10 days, after 1 week, you went to the shop to get extended warranty. Okay, so now they are providing extended warranty after the supply. Please understand, they are providing the extended warranty after the supply. In this case, because already the supply is over, now extended warranty is provided by the supplier or by the third person. It doesn't matter, sir. It will be treated as a separate supply. It will be treated as a separate supply and it will be taxed accordingly. That is what the concept. So I repeat, so if the extended warranty is taken after the supply is over, then whether it is provided by the third person or the supplier himself, the mobile seller itself, still it will be treated as a separate supply and it will be taxed accordingly. Hope it is clear for you. So you can just take the screenshot of the notes. So that is what the concept of extended warranty. With this, we are done with this amendment. Next, a very small amendment regarding GST on preferential location charges. Please understand, what is this preferential location charges? See, they are talking about, sir, when you are uh, paying a consideration for what? For getting any residential, commercial or industrial complex. See, for example, this is a residential complex. Sir, they said these side plots are east facing with good sunlight, good ventilation, all that stuff. These side flats are west facing. So you don't get like sunrise feeling, all that stuff. You can see only sunset, you cannot see sunrise. But if you want to see sunrise, you have to purchase these flats. Sir, here, if you want these flats, you have to pay some 10 lakhs extra, let us assume. So preferential location charges. Sir, that way, for example, there is an industrial corridor, a particular place where it is close to highway. If you want to take that on lease, or if you want to buy that, whatever it is, sir, this concept is applicable equally for selling, leasing, all this stuff. So please understand, simple, when you are taking a property on rent, when you are buying a property, sir, all these cases, I repeat, I am extending this clarification and discussing overall what is the applicability of preferential location charges. Preferential location charges is nothing but whether you are buying a property or you are taking a property on rent, etc. They are charging something extra because it is a preferential location. In that case, please understand, even though they are charging something extra, it is part and parcel of a composite supply, either the sale of the property or the renting of the property. So it is part and parcel of that. So the department has clarified it is a part of composite supply. So whatever the tax treatment is there for principal supply, the same tax treatment will be applicable for the whole. Suppose if at all you are buying an apartment, a flat in this complex, sir, under construction building, you know, when you are buying it is supply of service, and they are charging preferential location charges from you, that also forms part of the composite supply. So main supply is construction services, so automatically what, this preferential location charges also will be taxed as construction services. So the same tax treatment as the main supply, that is construction services, will come into picture. So that is what this second amendment all about. And if you remember, the similar type of thing we have seen even in exemptions, preferential location charges for long term lease. So long term lease 30 years or more, the preferential location charges there, it is exempt, if you remember, because long term lease is exempt. Preferential location charges are also treated as part and parcel of long term lease only and treated as principal supply. Principal supply is exempt, so that was also exempt. So the same logic here they are applying for this also. Now the next amendment, see, this is all about an Indian domestic company. See guys, for this a proper like notes or simplified version I have given here, you can just refer that. So now let us discuss the point. See, an Indian domestic company is providing or it is allotting the securities, the shares to the employees. But the interesting part is they are not allotting the domestic company shares. This is a subsidiary company. The domestic company is actually a subsidiary company and its holding company is located abroad. This Indian domestic company, which is a subsidiary company, is promising the employees the shares of the holding company which is in abroad. I repeat, the Indian domestic company, which is a subsidiary company in India, is allotting shares to the employees of foreign holding company. Okay. Now, sir, the point is the allotment directly happens, if you see, to the employees of domestic company. The allotment directly will happen from the foreign company, the foreign holding company. Okay. Now, sir, here allotment may be happening from foreign holding company, but it is like domestic subsidiary company is providing securities to employees of domestic company. So please understand, because it is a transaction in securities and it is part and parcel of employment contract, it is not at all a supply. That means subsidiary company giving shares to employees. Shares of holding company, that's a different story, but giving shares to employees is not a supply, because it is number one, transaction securities, and number two, they are providing this as a part and parcel of their employment contract. Okay, so it is not a supply at all. This is fine. But sir, the subsidiary company, the domestic subsidiary company, will pay the cost to the foreign holding company for the shares, for allotment of shares. Now, sir, if they are paying actually the cost, actually whatever is the cost of that securities, if they are paying only that much, then it is again, transaction in securities, it is not a supply. But sir, if they are paying any additional consideration, let us assume the securities value is 10 lakh dollars and we are paying only 10 lakh dollars, no problem, it is not a supply. But if we are paying 11 lakh dollars or 10 lakh 30,000 dollars, 10 lakh 40,000 dollars, like that, something additionally you are paying, the domestic subsidiary company is paying to foreign holding company, whatever the extra they are paying, then that is supply. Okay, let us assume $30,000 extra they have paid, $1 lakh extra they have paid, that will become supply. And on that, sir, it is treated as importation of services from foreign holding company by domestic subsidiary company. So what will happen on that? The domestic subsidiary company should pay GST. It is treated as supply of service, and they should pay GST under reverse charge mechanism. That is what the concept. Simple one. Simple one. I will summarize again. Sir, domestic subsidiary company is promising to the employees to allot shares in the employment contract, and they are allotting the shares. But actually, allotment is happening from foreign holding company of their own shares. So foreign holding company is allotting foreign holding company shares to the employees of domestic subsidiary company. So the allotment of shares to employees is nothing but transaction in securities, hence it is not a supply. Okay, now for this, domestic subsidiary company is making the reimbursement to foreign holding company. If they are reimbursing the exact amount, how much is the value of that securities, then it is nothing but transaction in securities, it is not a supply. But if they are reimbursing something extra, then sir, this will become supply of service. So it is treated as holding company from foreign is providing service to domestic subsidiary company. So it is like importation of services by domestic subsidiary company, and domestic subsidiary company should pay GST under reverse charge mechanism. Sorry, that is what the clarification. You can just take the screenshot of the notes. So with this, we are done with this amendment as well. Next amendment from charge chapter, sir. Simple. With respect to RCM goods, one thing is added. If at all any unregistered person is making a sale to registered person, what he is selling the metal scrap, notified metal scrap, then it comes under RCM. The registered person is liable to pay GST. Simple. So I repeat, unregistered person selling metal scrap to registered person, then RCM comes into picture. One new entry has been added in RCM goods. And again, same way, another new entry has been added in RCM services, where an unregistered person is renting an immovable property other than residential property to a registered person. See, we have already seen in entry 5AA. If you remember entry 5AA, sir, it is all about renting the residential property to registered person. Okay, now this is entry 5AB, where you are renting, can I say, other than residential property means commercial property to registered person. But here one more catching point is, sir, it should be by unregistered person. Definitely unregistered person. Here in entry 5AA, please understand, residential property is rented to registered person, no problem, sir, whether the supplier is registered or not, all that stuff, it doesn't matter. If the recipient is registered person, straight away what? It is taxable under RCM. But here, if the recipient is registered and the supplier is unregistered, then only with respect to this commercial property, then only RCM comes into picture. That is what entry 5AB, the new one, is added. Okay, so this is the entry. So hope it is clear for you. So with this, we are done with that also. The next amendment is with respect to place of supply. Please understand that there is a clarification with respect to place of supply in section 10 subsection 1 clause CA. Any supply made to unregistered person, sir, the place of supply will be the address recorded in the invoice. Even for recording the address, that, sir, even if the state name is recorded, that is more than sufficient. Now the doubt was, when anybody is buying, any unregistered person is buying through e-commerce operator, sir, he will be giving his address when he is making an online purchase, all the stuff. So that address will be recorded. Yes, place of supply will be that address. But the problem is, the billing address is different, the shipping address is different. When let us assume you are making a purchase in online, you are ordering something in Amazon during Feb 14th. Billing address is yours, shipping address is others. Okay, in such case, sir, there are two addresses recorded in the invoice. One is billing, the other is shipping. Which address we should take as place of supply? Then the department has clarified, sir, place of supply shall be the shipping address, not the billing address. That means the delivery address will be taken as place of supply, not the billing address. Billing address will not become the place of supply. That is a small amendment here with respect to sale of goods through e-commerce operator to unregistered person. Coming to next amendment, see, this is with respect to clarification on place of supply for custodial services provided by banks to foreign portfolio investors. Please understand, banks are providing custodial services to foreign portfolio investors. Let us not worry about foreign portfolio investors means what, custodial service, all that stuff. This is not AFM subject, you know. So now please understand, in that case their only dilemma was what is place of supply. The place of supply is, please understand, 13 subsection 8 will come into picture or not. 13 subsection 8, if you remember, services provided by banking companies, all that stuff, to account holders. Okay, if you remember. So here, sir, they have clarified, the department has clarified, sir, whatever the services provided by bank, in the name of custodial services, cannot be treated as services provided to account holders. Cannot be treated as services because these foreign portfolio investors are not the account holders in the banks. Okay, so place of supply will not fall under 13 subsection 8. You please go with the general rule. Please calculate the place of supply, determine the place of supply as per section 13 subsection 2 itself. Don't come to section 13 subsection 8. That is what they are telling us. That means, in simple words, banks providing services to foreign portfolio investors is not service to account holders. They are not account holders. So place of supply will be not as per section 13 subsection 8 but as per 13 subsection 2, the general rule. The next amendment is with respect to advertising services provided to foreign clients. Now see, first of all, let us understand what is happening here. See, there is a foreign client. Let us assume Netflix. Netflix is approaching an Indian ad agency and asking it to take full responsibility of designing the ad, advertising it, identifying the spaces where and all it can be advertised, maybe in the media houses or any other places, etc., etc. So complete responsibility of advertising Netflix brand is the responsibility of Indian ad agency. What Indian ad agency will do? Indian ad agency will make payments to media houses, various media houses. So it will make payment to various media houses for advertising all that stuff, and media houses will raise invoice on the Indian ad agency, and Indian ad agency will make the payment to them. Now what Indian ad agency will do? Indian ad agency will raise invoice on Netflix, and Netflix makes a payment to Indian ad agency. This is what happening. Now with respect to this, there are certain doubts. What are those doubts, sir? Now first of all, the first issue is with respect to whether the advertising company, that is the Indian ad agency in our example, can be treated as intermediary here to the foreign company, the foreign client. The answer is absolutely no. Why? Because here, if you have observed, Indian ad agency is taking full responsibility of designing the ad, identifying the potential media spaces where it can be advertised, making the payments to media houses in India. All these things is complete headache of the Indian ad agency. So Indian ad agency here is working on its own account. It is not acting as an intermediary. So you cannot call it as an intermediary here, number one. So it is not acting on behalf of Netflix. They are working to provide a service to Netflix on their own account. So they are not an intermediary. This is first clarity. Next, the second issue is, sir, here for the foreign client, for the services provided by Indian ad agency, here who is the customer, sir? Who is the recipient? Is it the representative of foreign client? That means Indian ad agency is regularly coordinating with the representative of Netflix in India. Should I call that fellow as the recipient, or the target audience are there, no, for the advertising? Should I call them as the recipient? The answer is, see, recipient definition says recipient is a person who is liable to pay consideration for the supply of the goods or services. Indian ad agency, the advertising company, the ad agency is raising invoice on Netflix, the foreign client, and getting money from them. That means, according to them, who is their customer? To them, the customer is foreign client, not the representative of foreign client in India with whom we are regularly coordinating with various things. So the point is, sir, neither the representative of foreign client in India nor the targeted audience are recipients. The foreign client, that is Netflix, is our recipient for the Indian ad agency. This is second issue. Okay. Now coming to the third issue. So the third issue is, whether advertising services provided by the Indian ad agencies to foreign clients can be considered as performance based services as per section 13 subsection 3, and can we determine place of supply as per 13 subsection 3. Sir, please understand, in place of supply 13 subsection 3, if you observe, to come under 13 subsection 3, either the good should be physically present to provide such service, or the recipient, the person should be physically present to provide the service. Now here, for the Indian ad agency to provide services to foreign client, that is the Netflix here in the example, sir, no goods are required to be physically present in India for providing that ad services. Or even Netflix, the recipient itself need not be present physically in India to provide such services. So place of supply as per 13 subsection 3 will not come into picture here. So you have to determine place of supply as per section 13 subsection 2 general rule itself. This is third issue. Okay. Now coming to the fourth issue. What is this fourth issue? The fourth issue is all about, sir, what if advertising company in India is merely acting as an agent of the foreign client? So in engaging with media owner, all that stuff, media houses, etc., etc. That means they are asking, what will be the place of supply if ad agency is acting merely as an intermediary? If they are acting merely as an intermediary, obviously, sir, the place of supply will be determined as per section 13 subsection 8 clause B. So what is the place of supply? Place of supply will be the location of the supplier. Place of supply will be the location of supplier. That means in the given case it is the location of the advertising company. That itself will be taken as place of supply. I repeat, if the advertising ad agency, Indian ad agency, is acting as an intermediary, then place of supply will be as per 13 subsection 8. Hence the location of the supplier, that means the ad agency's location itself will be treated as place of supply. Okay, that is what the concept. So that is what the clarification with respect to advertising services provided to foreign clients. So here this is the concept for you. Hope it is clear. So the next clarification, if you see, with respect to the place of supply for data hosting service providers, services provided by data hosting service providers located in India to cloud computing service providers located outside India. Now see here, what happens is actually the foreign cloud computing service providers will be outsourcing a work, or like will be taking the help of data hosting service providers who are located in India. What is the responsibility of this data hosting service providers in India is nothing but that they should provide storage space as well as technical infrastructure. They should provide storage space as well as technical infrastructure to this cloud computing service providers in abroad. Now here, when they are doing this, what data hosting service providers will do, sir, they won't just give the infrastructure, they won't just provide something like data hosting or the storage space, all the stuff. There are various things involved in this. See, what and all will happen here is, sir, there will be like infrastructure monitoring for this, IT management, equipment maintenance. Next, there also will be like involvement of operating data centers, ensuring uninterrupted power supplies, ensuring there are backup generators, ensuring there is network connectivity, ensuring there are firewalls, and monitoring their data centers and completely keeping them under surveillance. That means there are hell lot of services provided by this data hosting service providers in India to provide services to cloud computing service providers abroad. Now here for this, what should be the place of supply? That was the dilemma. Now the department has clarified here. The first thing we have to understand, these are services not related to goods, sir, and also these are not related to immovable property or their physical premises directly. Okay, so this is something beyond that. Okay, as we have discussed, so many things will come into picture when they are providing this data hosting services. Okay, so now the department has clarified, for this place of supply will be determined as per the default provision, that is a general rule section 13 subsection 2. Don't go with 13 subsection 3 or 4 or any other thing, come to general rule, because it is not just something related to goods which are physically made available, or this is not something directly related to immovable property, all this, but it is way beyond all that. So they have clarified that the place of supply will be determined as per the general rule section 13 subsection 2. Hope it is clear for you. Right, continuing with the next chapter, exemptions. See, The amendments, see, there are some exemptions which are newly added, some exemptions which are clarified or modified, all the stuff. So we'll see first new entries under CGST Act, whatever the entries have been added. First of all, certain small things are there, not that greatly what difficult, etc, etc. Of course, you know, even if it is difficult, I will make it easy for you. The Ministry of Railways, that is Indian Railways, they are providing services by way of selling the platform tickets, facility of providing retiring rooms or waiting rooms in the stations, clock room services, or battery operated car services to travel in the platform. All that stuff you will be seeing. Sir, all these things. Further, they are charging some consideration, nominal consideration from the passengers, that is exempt under GST. So this is the first entry. Next, one zone or division of Indian Railways to another zone or division of Indian Railways. See, for example, there is South Central Railway. This is a zone. They are providing services to Southern Railways. This is another zone, exempt under GST. And again, in railways, there will be in the zone, within the zone, again, there will be divisions. For example, there is a division called Guntakal division in Andhra Pradesh. They are providing services to Nanded division in Maharashtra somewhere, I guess. So there is another division in railways. So one division to another division, one zone to another zone. For that, if they are providing any services, Indian Railways, it is exempt under GST. There is another one. Next, special purpose vehicles. Now please understand, here I will just tell you, I will simplify this for you. For special purpose vehicles, certain people, certain entities will get a contract from Indian Railways where they construct the infrastructure for Indian Railways. So for constructing the infrastructure, they will not get any consideration. They will maintain the infrastructure. From that, they will just generate a revenue, all the stuff by way of selling the platform tickets, etc., etc., whatever it is. So they will construct the railway stations or any infrastructure for that matter. During the concessionary period, that means maybe 15 years, 17 years kind of thing. So during that period, that infrastructure will be owned by that special purpose vehicle itself. Now, during that period, please understand, special purpose vehicle is the owner of that infrastructure. Indian Railways is using that infrastructure, right? So for using the infrastructure, Indian Railways should pay consideration to special purpose vehicles. That means, I repeat, sir, special purpose vehicles are constructing infrastructure for railways. But during the concessionary period, that means for 15 to 17 years, the property will be in the name of special purpose vehicle only. So special purpose vehicles are allowing Indian Railways to use that infrastructure. In return, as consideration, what they are paying some monetary consideration, as well as they are paying consideration in the form of maintenance of that particular railway station, as an example, or that infrastructure, whatever has been constructed by that SPV. So now please understand, special purpose vehicles are constructing infrastructure, allowing Indian Railways to use that infrastructure. But that in return, Indian Railways is paying some consideration, as well as taking care of the maintenance of that infrastructure, cleaning, etc., etc., whatever the maintenance they are taking care, Indian Railways. So Indian Railways is paying consideration in the form of consideration of like maybe monetary consideration, as well as maintenance of that infrastructure. This service is exempt under GST. Okay. So simple. What is that service here? Allowing Indian Railways to use the infrastructure built and owned by special purpose vehicles during the concession period, against the consideration of what? Against the consideration and services of maintenance supplied by Indian Railways to special purpose vehicles in relation to the said infrastructure, which is built and owned by SPVs during the concession period. Okay, so that is what the concept, that is exempt under GST. Now another interesting one, this is for you people, for students mainly. Okay, sir, any person providing accommodation services to any person, but here the point is, the value of supply should be less than or equal to 20,000 per person, and very important thing is that the stay period should be minimum 90 days. That means it should be greater than or equal to 90 days stay, continuous stay of 90 days. For that, if you are paying the rent, then it is exempt under GST. That means we are talking about mainly here hostels or any PGs, whatever you call, paying guest houses, etc., etc. So to just bring a clarity in law with respect to this entry, in entry number 12 regarding renting of residential property for residential purpose is exempt under GST. In that, they have added a point saying that renting of residential properties exemption is not available to students in student residences or hostels, camps, paying guests, and the like areas. So you should come to 12A only, this entry only. Okay, hence exemption under 12A comes into play. So renting of residential premises for residential purpose is exempt, but that is not applicable for any places where students or working professionals etc are staying. So for you people, come to entry 12A, where I am giving exemption, where you are paying your hostel fees etc PG fees less than or equal to 20,000 per month na exempt under GST, but only condition is you should be staying there for minimum 90 days. That means your stay should be greater than or equal to 90 days and rent should be less than or equal to 20,000 per person per month. Then you can enjoy the exemption. So this is a good news for students and the benefit for students. That is what the next point. But the interesting part here is hostels, what they did, even though GST is exempted, they have compensated with by increasing the hostel rent, so that students are not getting benefit. If you are not getting that benefit, you can just complain to GST department also by March 31st, taking anti-profiteering clause into picture. Okay, so fine, coming to the next one, sir. 25A. So if you see 25A, this is nothing but electricity transmission and distribution utilities. The electricity transmission and distribution utilities, they are providing services by way of transmitting or distribution of electricity. If you see, there is an exemption for that. And earlier, if they are providing any metering equipments on rent, or if they are coming and testing the meters, transformers, capacitors, releasing electricity connection, if that has been kept on hold because you have not made the payment, all that stuff, and later on you made the payment and they are releasing the connection, labor charges for shifting the meters, service lines, or issuing the duplicate bills, point number 5, issuing the duplicate bills etc, all these things were earlier taxable. Now they made a new entry giving exemption to these things, so these are also exempt now. So please remember it. So electricity distribution, transmission and distribution utilities providing these services are now exempt under GST. Okay, so that is next entry. Coming to another entry, see, the next entry is generally any person, generally this will be seeing in PG colleges or PhD colleges where students are doing research etc. Sir, for the research and development, what they are doing, they will get consideration in the form of grants. Government entities or research association in the university, college or other notified institutions, they will be providing grants to people for carrying out research and development services. Those grants are exempt under GST. Am I clear? That is what the point. So you are doing research and development for what? For the purpose of research and development, yes, the government entity or any universities or colleges are providing you grants which are notified under section 35 subsection 1 clause 2 and 3 of Income Tax Act. Sir, the consideration is paid in the form of grants, that is exempt under GST because you are doing research and development. So that is what the case. Here recipient is technically speaking not applicable, that situation will not come. Next, entry 66A, a new one. If you see in educational services, they have added central and state educational boards or councils or any other similar bodies providing services by way of affiliation. Understand here, this is only for the schools, not for colleges. So services of providing any affiliation for any schools which are established or owned or controlled by central government, state government, union territory, local authority or governmental authority or government entity, not even for private people. For government, simple words, for government schools, if we are providing any affiliation services, who are providing this CBSE or state boards, if they are providing any affiliation services, then it is exempt under GST, for which they are charging a consideration. It is exempt under GST. And there are various clarifications also added in this educational sector, where I am discussing them here itself. Okay, see, PGCA is approving flying training organizations and flying training courses, and after course is completed, the certificates are successfully granted to the students in accordance with the Aircraft Act 1934. Of course, now they are replacing this act with a new act. That's a different story, let us not worry about that. So this flying training courses, whatever are provided, if you understand, by FTOs, that is flying training organizations, are nothing but the educational services which are provided as part of curriculum, which is to obtain a recognized qualification by Indian law. So they have clarified that the services provided by these people are exempt under GST. Okay, so if they are provided by the education institution, yes, because as they are provided by the education institution for obtaining a qualification recognized by the law. So as we have discussed this. Next, it is clarified by CBIC that affiliation services by central government, state government educational boards are not covered within the ambit of exemptions provided to educational institutions, hence they are taxable. Same services to government schools are exempt. Just now we have discussed, sir, affiliation services provided by CBSE, state boards etc to schools are not covered within the ambit of exemption provided to education institutions, hence taxable. Same service, see, that means I can say this affiliation services provided to government schools, they are exempt, but if they are provided to others, obviously taxable. That's all simple. Okay, so that is what the concept. Next, again, the affiliation services provided by universities to their constituent colleges are also not covered within the ambit of these exemptions, hence that is also taxable. Sometimes like you will be seeing on college buses, etc., etc., affiliated to so and so university, like that. So for that, affiliation provided by universities, here it is not CBSE or state boards, and it is not government schools. Affiliation services provided by central or state boards or the related things to government schools only exempt, not any other things. Government schools in the sense, as I told you, that the school should be owned or established or controlled by central government, state government, union territory, local authority, governmental authority, or government entity. Hope it is clear for you. So sir, you are talking about affiliation here. See, now the point is, the affiliation activity monitors institutions infrastructure, technical prowess, financial liquidity, faculty strength, to ensure it can conduct courses for students enrolled in a university degree or title. However, these services are not related to student admission or examination conducted by the institution, hence they are not enjoying the exemption. Simple. They give just what through affiliation universities or these boards will do. They will monitor the infrastructure or the faculty strength, etc., etc., how the college is, whether they are able to deliver the they are able to deliver the courses or not. All that stuff they will be monitoring. Okay, fine. So we have understood affiliation exempt only if it is by central board or state board or other similar boards to government schools. That's all. Any all other cases it is taxable. Okay, so that is what with respect to new entries under GST Act. So the new entry under IGST is nothing but if a foreign airline company is located in India and if it is importing services from its related person or other establishment located outside India without consideration. You know section 7 subsection 1 clause C read along with schedule 1 para 3, there it is a point like importation of services without consideration from related person or own establishment located outside India is supply, even though it is done without consideration. But if it is a foreign airline company importing services from their related person located outside India, then that is exempt under GST provided certain conditions are being fulfilled. What is the first condition? What is the first condition? So the first condition is that foreign airline company should be there in India providing some services of transporting the goods and passengers and paying GST. So that means in India this foreign airline company is a taxpayer. Simple. Next, number 2, the Ministry of Civil Aviation is also confirming that yes, this is a foreign airline company which has come to India under bilateral air service agreement with that foreign company, like that Ministry of Civil Aviation also should confirm. Okay, so that is the next one. And what is the next condition? What is the next condition? The last condition is nothing but, sir, Ministry of Civil Aviation is also confirming that Indian Airlines in that particular foreign company is also not being subjected to taxes for the similar transactions. That means nothing but, for example, sir, any UK airline company is in India operating and getting this benefit. In UK, Indian airline company also should be getting the same benefit. That means it is like give and take policy between the governments. Like you also give relaxation for our airlines in your country, we will also give relaxation to your airlines in our country. Okay, so that is what the concept. So this is the new entry added under IGST Act. Now, the changes in existing entries, if you see, earlier in this entry number 69, sir, there was NSDC and Sector Skill Council SSC, but here now they have just brought in place of Sector Skill Council, they have brought in this National Council for Vocational Education and Training. So apart from that, everything the entry is same. So if the services of any service in relation to national skill development programs or any vocational skill development programs which are implemented by NSDC or here which are under National Skill Certification and Monetary Reward Scheme. So just government scheme names, just remember that. So that's all those schemes. Next, National Skill Qualification Framework aligned with qualification or skill in respect of NCVET has approved the qualification program, all these things. So here the new thing is NCVET has been added. And next one, sir, any awarding body recognized by NCVET, the assessment agency services which are recognized by NCVET, training bodies accredited with an awarding body that is recognized by NCVT. So all these things are nothing but related to some skill development or training programs where National Skill Development Corporation or National Council Vocational Educational Training is coming into picture, or the awarding bodies which are granting the awards are assessing the performance of the people who got trained, or the training bodies which are approved. These people providing services are nothing but exempt under GST. So that is the change here. In place of Sector Skill Council, they have added this NCVET, they brought into picture. Okay. Next, what is the next one? The another small change is nothing but there is an entry where the training providers, if at all I am providing training to any students, for that I am getting consideration. Okay, under Deen Dayal Upadhyaya Gramina Kaushalya Yojana under Ministry of Rural Development. So for this scheme earlier there was a skill or occasional courses like that, it was there. Now they have just added the word education and training programs. So skill or occasional educational training programs are exempt under GST but provided under that particular scheme, Deen Dayal Upadhyaya Gramina Kaushalya Yojana. Okay, so that is exempt. So these are the changes in existing entries. Next one is with respect to clarification of statutory dues collected by RERA. Please understand, actually in entry number 4, any governmental authority providing services which are in relation to Article 243W and G entrusted to Panchayat and Municipality, all that, so that is exempt under GST as per entry 4. Now the doubt was whether this RERA is a governmental authority, because they are also collecting some statutory dues and further they are getting some consideration. Is that exempt under GST? Then the department has clarified RERA is very much within the meaning of governmental authority, and hence the services provided by them by way of collecting the statutory dues is exempt under GST, as it is falling within the entry number 4. So the next one is related to the clarification. The loan granted by related person or overseas affiliates to an Indian entity. See, generally when banks or financial institutions or NBFCs are giving loans to any lenders, the borrowers, okay, to the borrowers. To borrowers, sorry, right? So when they are granting the loan, just to understand the credit capacity, the repayment capacity of the borrower, what they will do, they will just process the application, all that stuff, etc., etc. So they will charge, after issuing the loan, they will charge loan processing fees, documentation charges, etc., etc. And generally they are taxable. Interest on loan is exempt except credit card interest, but the loan processing fees, documentation charges, all these things are taxable. So here the doubt is, sir, when related person or overseas affiliate is providing loan to the Indian entities, sir, because they know each other, they are related person, or my own foreign affiliate is there or foreign entity is there in abroad and they are granting loan to me and I will be repaying to them. We understand whether there will be a situation where they will assess my repayment capacity or my credit analysis, all that stuff they will do. So all these documentation charges, loan processing, etc. will not come into picture here, so they will not charge it. Now the doubt is, sir, should it be considered as supply without consideration? Loan processing fees is not charged, that means it is free. So supply without consideration. So schedule 1, para 2 and 4, can I trigger and can I charge GST on this? Like that, the doubt was there. So please understand, these related persons will not charge processing fees from the other fellow, because they know about them everything. So there won't be such processing activity or administration things which makes them to charge consideration. So you cannot treat both the transactions as same. They are not standing on equal footing, and the department has clarified. So this is not something same like other financial institution lending loans to the borrowers, all the stuff. So processing fees will not be charged and it need not be charged also. Here you cannot bring schedule 1 into picture. You cannot call it as supply. It cannot be treated as supply. So not treated as a supply. So this is not a supply. So hence no GST. That is what the concept, right? So this is the next clarification. So the notes is clearly given here. You can just go through this. The next one is regarding a small one, reinsurance. See, actually, reinsurance services provided with respect to life and health insurance services, which are, not life and health insurance, life and general insurance services with specified schemes in entry number 35, 36 and 40. If you see, there is an entry where entry 36A, reinsurance is also covered. So reinsurance, if you provide also, that is exempt with respect to the specified life insurance and other general insurances. So here reinsurance word includes retrocession. So that is what the one clarification. nothing that greatly relevant. Yes, you can just remember that word. Reinsurance includes retrocession, that is more than sufficient. Now if you see there is a department, government department called Central Public Works Department, which will be developing and maintaining the public parks in government residential colonies, government offices and other public areas. And they are also regarding maintaining their duties also, like regarding this community assets, urban forestry and protection of environment, promotion of ecological aspects, all these things. These are generally functions entrusted under Article 243G and 243W. So regarding this activity, see, this is nothing but an activity which is covered under Article 243G or W. So for this, government is providing various services. Sir, not only government providing services here, for government, to government. That means, for example, the maintenance of parks, etc., etc., or the horticulture works, etc. These things are outsourced by this CPWD, the department, to outsiders, the private people. So they are providing either pure service or composite supply, where you know that 75-25 ratio, 75% service and 25% worth goods can be supplied, all that. So in such way, if anybody is providing services by way of even horticulture and horticulture works to CPWD, sir, these are also nothing but covered under very much entry number 3 and 3A. So it is exempt under GST. So in short, any private person, sir, what they are doing, they are providing services to CPWD. What is the service? Services with respect to horticulture and the other works, horticulture and related works. So there, because it is covered under 243W and 243G, such activities, if you are providing to government departments, all that stuff, so government is exempt under GST. So this is exempt. So simple. If you remember, we have discussed in exemptions also maintenance of street lights, all that, such type of services we are providing to government, all that. So here the clarification is regarding the Central Public Works Department is outsourcing a work where people are providing services by way of doing this horticulture or horticulture related works to CPWD, is exempt under GST. Okay, right. So that is what next clarification. The another clarification is with respect to DMFT. So DMFT is nothing but District Mineral Foundation Trust. So this trust generally is for the purpose of, sir, this is set up normally because of the mining, etc., etc., the people who are living in the surrounding areas, for their welfare. So for the benefit of persons and the areas affected due to mining related operations, sir, DMFT has been set up. Their main responsibility is to take care of providing drinking water and environment protection, healthcare facilities, education, welfare of women and children over there, and supply of medical equipment. Sir, this has been set up by state governments. These are being set up by state governments, hence they are called as governmental authorities. Okay. So whatever the exemptions available for every governmental authority, the same things are also available to these people also. The same eligible for same exemptions which are available to any other governmental authority. Okay. So any services or supplies made normally through this DMF fund, see, they are providing this without consideration. They have the funds. The funds may be provided by the government, all that stuff. So they have the funds and they are providing services from those funds, or they are providing some supplies out of those funds. For that, they are not charging any consideration from the beneficiaries. So they are not at all supply. Okay, so there is another point. So whatever the supplies they are providing is not for any consideration from the beneficiaries. So whatever they are supplying is not a supply. Second thing, sir, they should be treated as governmental authority for the purpose of this GST. Whatever exemptions available, wherever the exemptions available for governmental authority, the same exemptions are also available for this particular people. Okay, so that is what the next clarification all about. The next one is regarding time of supply. Again, there are no amendments, actually the clarifications. See, normally, sir, government is providing spectrum usage services to telecom companies, and telecom services are paying for that spectrum license also. Here now the doubt was regarding the GST treatment on this particular spectrum license what the government is giving to telecom companies. Understand here, the spectrum licenses, whatever the government is providing to business entities, the telecom companies, are nothing but subjected to GST under RCM. First, we have to understand. Now, sir, if at all, if the payment, whatever the telecom license for that payment, if it is made fully upfront payment, then the time of supply, the GST liability will come into picture when the amount is due or made, whichever is earlier. This is fine, sir. But what if the spectrum license charges are paid on installment basis, or paid on installment basis? What is the time of supply? There, the department has clarified here. See, this is nothing but similar to continuous supply of service, because it is going beyond 3 months. And for that, sir, the invoice should be raised accordingly by following section 31 because it is a continuous supply of service. And here the GST liability will come into picture. The GST liability will come into picture. If you understand here, even though it is paid in installments, the due date is ascertainable here because the due dates for the payments has been ascertained in the contract. So here what the department has clarified, the GST liability will come into picture whenever that payment is made or due, whichever is earlier, that will be taken as time of supply. And please understand, the same treatment, the similar treatment will also be given for any other natural resources allocated by the government to the successful bidders. So that is what the point. So I repeat, see, simple telecom license, the spectrum license given to telecom companies by government is under RCM because services by government to business entity RCM. Next clarity is regarding what is the time of supply for the spectrum license given. The spectrum license given, for example, if it is for 100 crores, 100 crore upfront payment if it is made, then no problem. Whenever the amount is paid or due, whichever is earlier, that will be time of supply. Suppose if it is paid in installments, imagine 100 crores, they are giving 10 installments over a period of 5 years and it should be paid. In such case, due dates are also fixed there, everything is done, and this will go beyond 3 months, and hence it will be called as continuous supply of service, and hence the GST liability will come into picture when the payment is due or made, whichever is earlier. And similar treatment is applicable for all the natural resources which are granted by the government to business entities. So same clarification is applicable. That is what this first clarification with respect to spectrum license. Now if you see the next clarification, see, this is also related, like little bit similar, where see, normally there are concessionaries who are providing their services to NHAI. What are the services they are providing? Sir, they are building the roads, designing them, building them, operating them, and then they are transferring it to government. So this will happen for a period of 15 to 17 years to complete this entire transaction. Okay. In this transaction, sir, the concessionaries are providing services to NHAI, National Highway Authority of India. What is the tax treatment for that? For that, the department has clarified. See, this is nothing but similar to continuous supply of service. And please understand here, previous spectrum license and here the difference is previous spectrum license. See, spectrum license, government is providing services to business entity, taxable under RCM. Here, concessionaries, the builders who are constructing the roads, are providing services to NHAI, taxable, but taxable under forward charge. Previous one is reverse charge, this is forward charge. So here, sir, this is taxable, and what is the tax treatment? Now, then they have understood. See, in these cases, what will happen over a period of 15 to 17 years, where they are designing, building, operating, and transferring the roads to the government, sir, they are charging consideration, and this consideration is spread across a period of 15 to 17 years because the service is also going to spread across 15 to 17 years. And here department has clarified, sir, what is the time of supply for this and what is the tax treatment for this? Na? Sir, this is taxable, and the time of supply is, understand, this is very much similar to continuous supply of service. This is very much a continuous supply of service. Where it is, so this is similar to continuous supply of service because it goes beyond 3 months. So for that, what is the time of supply now? So the time of supply you should see based on section 13 subsection 2. So based on 13 subsection 2, the general rule, you should see whether invoice is raised within the due date or not. If invoice is raised within the due date, and date of invoice, otherwise date of payment, whichever is earlier. Sir, if the invoice is not raised within the due date, date of provision of service or date of payment, whichever is earlier. 13 subsection 2 you follow. Clear? So that is what the concept. So that is all about this clarification regarding services provided by concessionaries under hybrid annuity model to National Highway Authority of India, where they are designing, building, and operating and transferring those roads to the government, which is spread across a period of 15 to 17 years. Right, guys, the next clarification is regarding the guarantee given by the directors or the corporate guarantee, where, see, I given here the notes for you to read all that for your better understanding. Yes, I have given notes here separately and an example also. You can just go with that. So here, first of all, one situation is where company is taking the loan, director is giving the guarantee for that. Next situation, company is taking the loan, another related person, another company is giving the guarantee. So we are calling it as corporate guarantee. In such cases, because they are related persons, whatever is happening between them is supply, and there should be GST on that. For charging the GST, there should be value of supply. Value of supply, you know, when there is related person situation coming into picture, rule 28 will come into picture. So rule 28 is being amended here, and there is a clarification, all that stuff also. So let us see that. Sir, nothing but when director is giving guarantee to the company, I mean guarantee to the banks for the loans taken by the company, in such cases, sir, what is the value of supply? The value of supply is, see, as per rule 28, the open market value should be the value of supply because transaction between related person. Now, the RBI guidelines says any director giving corporate guarantee, the guarantee to the loans taken by the company, he should not receive any consideration. That is what RBI guidelines says. That means for this transaction, there is no open market value going to be available. Then here, what is the value of supply? Nothing. So nil and no GST. But RBI guidelines also says that in exceptional circumstances, you can pay remuneration to the director for giving this guarantee. If that is the case, whatever the remuneration has been given, that itself will be taken as value of supply, right? So that is first part of this particular discussion. Now coming to the next part. The next part is, sir, if a company is giving guarantee to another company which is nothing but a related person, right? In such cases, sir, here please understand, guarantee is to be given to a company which is located in India. Okay, the company should be located in India, then only this one. If the company is located outside India and you are giving guarantee, then this will not come into picture. Okay, so now, sir, what is the value of supply? What is the value of supply? The value of supply is 1% of the guarantee given or actual consideration. So 1% of the guarantee given per annum and of the amount of such guarantee given per annum or actual consideration, whichever is higher will be taken. Now, here another interesting thing is, if the recipient who is taking the guarantee is eligible for 100% ITC, whatever the consideration they are charging, that itself will be taken as value of supply. I will simplify it even further with an example. So here there is an example given. If you see, sir, there is HDFC Bank which is giving loan of 100 crores to Vaikunth Limited, which is a subsidiary of Mahavishnu Limited. For this 100 crores, somebody should give guarantee to HDFC Bank. Imagine if HDFC Bank is getting guarantee from the director of the company called Vishnuvardhan, Mr. Vishnuvardhan. Then the law says, for these type of things, actually as per RBI guidelines, Mr. Vishnuvardhan is doing it without consideration, and value of supply is nothing but open market value, and we have understood already there is no open market value for this. So because there is no open market value, value of supply will be nil. So that is first thing. Suppose if Mr. Vishnuvardhan is charging a consideration of 20 lakh rupees for giving this guarantee, then the 20 lakhs will be taken as value of supply. On that there will be GST. Hope it is clear for you, right? Next, sir, suppose if the guarantee is given by, this is what the second part of discussion actually. If the guarantee is given by Mahavishnu Limited, the holding company of Vaikunth Limited, and here the guarantee is given for 5 years, and each year the renewal will happen. And Vaikunth Limited pays 25 lakhs to Mahavishnu Limited as a consideration for this every year. Now, please understand, what is the value of supply? The value of supply will be 1% of 100 crore, the guarantee for which you have given, or 25 lakhs, whichever is higher. So obviously 1 crore will be higher, and Mahavishnu Limited has to pay GST on 1 crore because being the supplier. If Vaikunth Limited, the recipient, can take ITC fully 100%, then, sir, whatever is charged in the invoice, whatever is the amount charged in the invoice, that is nothing but the actual consideration, that itself will be taken as value of supply. We will not compare it with 1% of the amount on which guarantee is given. Clear? So that is what the second scenario. Hope it is clear for you, right? So I request you to just download the material here, like the amendment material is available in the description. You can just go through the Telegram channel, you will download it. If you have the time, please write that also, so that once it will be better stored in your memory. So otherwise you can just take a screenshot of this also, it is covering everything. My suggestion is, better if you write it once, you will have even better clarity, or you can remember it for a longer period. That is what this clarification. And one more thing, some small part of discussion is also left here in this. Sir, there are various other possibilities also with respect to this clarification. Here, sir, what they are telling now, see, loan, you give guarantee, no sir, you give corporate guarantee. Here the problem is, loan is partly availed. Out of 100 crore, they have just availed 30 crores, or they did not even utilize that. Imagine it is a bank overdraft or whatever it is, sir, they have not yet availed it fully. Whether the GST will be charged on only loan amount availed, etc. Here, please understand, value shall be 1% on the amount guaranteed, but not on the loan disbursed. Please understand that. So how much loan disbursement happened, that doesn't matter. Here you have given guarantee for how much amount, on that 1% we will take as value of supply, right? So that is first one, right? We are done with this. Next, second one. Sir, what is the second one? takeover of existing loans. That means, normally HDFC Bank is having loan and we are shifting it to ICICI Bank. So this takeover of existing loan is there, no? Again, we should pay GST on that. Within 1 year itself, like already I have paid GST when the loan was taken in HDFC Bank, 100 crores, director gave guarantee or another company gave guarantee. Now, sir, it is being shifted to ICICI Bank after 6 months or 7 months. Should again I pay GST on this? So not required. Please understand, merely an assignment of already issued corporate guarantee, the GST shall be applicable only if there is any fresh guarantee. Only if there is any fresh guarantee, otherwise GST will not be applicable. Am I clear? So that is what the concept. Next, so simple, takeover of existing loans, no GST again. Only one, simple. Once you pay for the corporate guarantee, what you give, you pay once. Again, if there is any fresh loan for that, again you are giving any guarantee, again you pay. Just shifting of loan from one bank to another bank and all, again and again don't pay GST. Okay, that is second one. Now the third one, the intra-group corporate guarantee. Obviously, we are group companies. One company is giving corporate guarantee to another company. Sir, if it is given by the domestic company, GST will be paid under forward charge. If the guarantee is given by the foreign company, then GST will come under reverse charge. Simple. Sir, what if the company is located outside India to whom we are giving guarantee? As I already told you, if it is export of service, if the guarantee is given to a company located outside India, the above provisions are right away not applicable. This is only when the recipient, the company to whom you are giving guarantee is located in India, then only these provisions are applicable. Otherwise, these provisions are not applicable. Now, sir, what if guarantee is given for multiple years or less than 1 year? Then obviously, what, for each year you will charge 1%. In case of less than 1 year, sir, you will go proportionate calculation. For example, loan amount is 100 crores, guarantee given. We have given guarantee for loan of 100 crores and it is for 4 months. And we got a consideration for giving guarantee 2 lakhs. This another company got a consideration of 2 lakhs. What is the value of supply? 1% of 100 crores, sorry, 100 lakhs into, this is not for 1 year, this is for 4 months. So 4 divided by 12. Compare, you will get 4 lakhs, or compare it with 2 lakhs, whichever is higher. 4 lakhs is higher, value of supply will be 4 lakhs. That way, proportionately, you should do the calculation. Hope it is clear for you. Right, next. So, sir, suppose what if the corporate guarantee is given by multiple related entities? GST shall be paid by each such co-guarantor on proportionate basis. For example, this is Vivard Limited. Sir, 100 crore I am taking loan, and for that guarantee A Limited is giving, B Limited is giving. A Limited is giving for 60 crores, B Limited is giving for 40 crores. In such case, for 60 crores, A Limited will pay GST. For 40 crores, B Limited will pay GST on proportionate basis. Simple. Okay. So that is what all about this clarification and the amendment in Rule 28, Sub Rule 2. So let us move on to the next clarification. So the next one, if you see, the clarification regarding the services provided by head office to branch officers. See, where head office is providing some services to branch officers, for which full ITC is available to the concerned branch officers. There are internally generated services, and for that there are invoices issued. Here the problem is, see, the head office is raising the invoice for the services provided to branch office. In that branch office, whether in that invoice to the branch office, whether the cost of all components, including the salary cost of the head office employees, who are involved in providing this service, this also should be included in the invoice. That is the doubt. Is it to be included? Then the department has clarified, sir, if the ITC is available, please understand, if 100% ITC is available, whatever is declared as an value in the invoice, that itself will be taken as open market value. So you need not worry about adding the cost of the head office employees into this, all the stuff. So not required. And if invoice itself is not raised, then the open market value itself will be treated as what? Nil. That means, understand, sir, head office is providing services to branch office, and in such cases, value of supply, if 100% ITC is eligible for the recipient, the branch office, then invoice is raised, that itself will be taken as open market value. Not raised, open market value will be taken as nil. On that, GST will be paid. Clear? So whether the cost of employees is included or not of the head office, it doesn't matter. Not only here, one interesting part is that even if the branch office is not eligible for 100% ITC, in that cases also, it is not mandatory to add the value or cost of the employees of head office in the taxable value of supply. So whether simple ITC eligible or not eligible, cost of employees, all this stuff of head office need not be added, not an issue. Okay, so that is what the another part of this clarification. Okay, 100% ITC available, 100% ITC not available. Clear? So with this we are done with that clarification. Let us move to the next one. So the next one, if you see, rule 31B and 31C, the new rules. See, this is with respect to online money gaming, online gaming. With respect to this, what will be the value of supply? So you know, online rummy or online PUBG, etc., etc. For online gaming and online money gaming, all these things, sir, what is the value of supply? And not only that, sir, the same logic, same provisions are applicable even for casinos also. Okay, in casinos you might be going and playing various games. For that you might be purchasing some tokens, chips, coins, or tickets, all that stuff, right? So for that, what is the value of supply? So I repeat, rule 31B, 31C, different situations, but conceptually both are same. So what is the value of supply here when you're going through online money gaming or online gaming, all the stuff? Sir, imagine for playing that game, you have deposited 10,000. That 10,000 will be value of supply. Sir, I have used only 8,000. I have used only 8,000 and 2,000 they have refunded to me. They have refunded to me. Now, what will be the value of supply? The value of supply still will be 10,000. That means once you have deposited the amount, whatever you have deposited, that amount will become the value of supply because they have refunded it or returned it to you, whatever reasons, sir, that will not be considered. So any amount returned or refunded by supplier to the player for any reasons whatsoever, including player not using the amount paid or deposited. If you say like, sir, I have not used that money so that I am taking it back, still we will not ignore that. We will take GST on full amount, and that is not only on the normal currency money whatever you have paid, but also money's worth including virtual digital asset. So I can say, like, if you put up even cryptocurrency also, then it will be taken as consideration and it will be subjected to GST. So even in casinos also, if you are going to play any this games where you are buying the tokens, chips, coins, tickets, all that stuff, how much ever you have deposited, that much will be taken as value of supply. I repeat, if anything is returned because you have not played the game, all the stuff, then also we will not leave you, we will charge full GST on full value. Okay, now another interesting point for both this rule 31 and 31B and 31C is this one. Sir, this is applicable for both 31B and 31C. If you have won, let us assume your investment, I mean you have put up 10 lakhs, won 20 lakhs, you continued playing, you continue playing, the 20 lakhs, 20 lakhs became 100 lakhs, 100 lakhs became 200 lakhs, you continue paying, there won't be any GST. But if you withdraw and again put it back, then only we will charge GST. So out of the 10 lakhs, you made it 100 lakhs. Out of 100 lakhs, you are withdrawing 40 lakhs. And then you are playing. So after playing entire balance 60 lakhs, you lost. Now again you are depositing 40 lakhs to play. That 40 lakhs will be again subjected to GST. Okay. So that is what the concept. So I repeat, sir, you have taken 10 lakhs to the casino or for online gaming or online money gaming. That 10 lakhs you kept on winning. It became 100 lakhs. After becoming 100 lakhs, what? You're withdrawing 40 lakhs for safer side. Okay, let me just close all my loans and become debt free like that. So let me play with this 60 lakhs. You're playing. And that 60 lakhs became zero now. Now you're putting back again that 40 lakhs. Then that will be subjected to GST again. So that is what the concept. So here I just give you the meaning of online money gaming and online gaming. You can just pause the video and go through that. So online money gaming, we can say Rummy Circle. Online gaming, you can say PUBG. Okay, so this is what the concept. Okay, there is a small example here: casinos and online gaming, including online money gaming. Sir, Mr. Gambler is visiting Big Daddy Casino in Goa, participating in a gamble by buying chips, paid 10,000 in cash and 20,000 using Bitcoin. Refund, he has taken 5,000 for not using the chips. He won 60,000 and played using 40,000, withdraw 20,000 and invested back 15,000. What is the value of supply? So the value of supply is, first he has deposited 10,000 and 20,000. Later on he took refund, all that, it will not be considered. So 30,000 will be value of supply. and later on again whatever the winnings etc story happened, again what how much amount he has invested. Sir, he has invested 15,000, so value of supply will be 15,000 again. So that is the story. Okay, so a simple example to clarify every adjustment, right? So this is what all about this particular rule 31b and 31c. So let us move on to the next amendment. So the next one is regarding the next clarification is regarding the salvage or wreck value earmarked in claim assessment of damage caused to motor vehicle. See now here, what is this actually now? Please understand. Let us assume there is a car and insurance has been taken on the car by the owner. Now this car has been subjected to accident. You can understand this is accident car, that is why it is like that. Otherwise it would have been even neat. You know, you don't know my artistic skills actually. Right? So this is a car which was subjected to accident. Now imagine while taking insurance on the car, that fellow has declared the value of car as 8 lakhs rupees, on that he has taken insurance. So now this car is now subjected to accident, completely gone, all that stuff. Now there is total loss, and if you sell that now, you will get 1 lakh. That is the salvage value or wreckage value of that car. Now insurance company is paying to the customer what? Based on that, the tax treatment for this salvage value will determine. Now the doubt is whether insurance company has to discharge GST liability when this salvage or wreckage has been sold for 1 lakh. Now the point is, see, if the insurance company is paying only 7 lakhs to the insured person, the person who has taken insurance on this, that means this salvage will become the property of that fellow. That means, Ray, however you sell that, you will get 1 lakh. Balance 7 lakhs I am giving, keep it with you. So salvage and wreckage is the property of the insured person. So GST liability will not come on the insurance company. GST, like, insurance company doesn't have any right over that salvage or wreckage, that will not sell that. So no GST liability on that 1 lakh for insurance company, in the hands of insurance company. Now if the insurance company pays full 8 lakhs to the customer, that is full amount 8 lakhs. That means they are buying that salvage amount, the entire thing also is with the insurance company only. So insurance company is the owner of this property now, the salvage or wreckage. Now when insurance company is disposing this salvage or wreckage for 1 lakh rupees, GST liability comes into picture. Insurance company has to pay GST on that. That is what the concept. Hope it is clear for you. So if the insurance company pays full amount, the salvage or wreckage will become the property of insurance company. So when it is getting disposed, insurance company will pay GST. No sir, we are deducting the salvage amount and paying only the balance amount to the customer. That means the salvage or wreckage will be the property of the customer only. So if that is disposed of, GST liability will be on him based on other conditions being fulfilled, but not on the insurance company. So that is what the concept, right? So with this, we are done with this particular clarification also, and hence we are done with value of supply amendments. Now let us move on to this new subsection 16 subsection 6, actually a very interesting provision, and I am going to simplify it in such a way you will definitely love this explanation from me, right? 16 subsection 6, what is 16 subsection 6? Time limit for taking ITC in case of revocation of cancellation of registration. Please understand, sir, what is this all about now? When your registration gets cancelled and you are asking for revocation, sir, there is a period of cancellation. From the period of cancellation till the revocation, what is the time gap is there? For this time gap, you are not able to file the returns, and because you are not able to file the returns during that period, whatever the ITC is there, that ITC you will not be able to avail. And now when you have taken the revocation, now if you see, if you look back and you want to take ITC for those periods which over during that, like cancellation and revocation period, if you want to take ITC, 16 subsection 4 time limit is over. In that case, how to handle? Now see, first of all, simple. What is this provision talking all about now? The date of cancellation, at the time of cancellation of that registration. For me, during this period, I repeat, the period is between cancellation to revocation. For this period, whatever the returns you did not file, so for that period you have not taken ITC also, because you could not file your 3B. Now for that period, see, what we have to understand is, at the time of cancellation, whether 16 subsection 4 time limit was still available? Yes sir. Then in such case, please understand, avail ITC as per 16 subsection 4. Sorry, one second. So at the time of cancellation of registration, sir, whether 16 subsection 4 time limit is available? Yes, sir. Now at the time of revocation, still if 16 subsection 4 time limit is available, still 16 subsection 4 time limit is available, that is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. So if that is available, accordingly you proceed. But sir, I'll give you example also for this, so please wait. But sir, at the time of revocation, at the time of cancellation, 16 subsection 4 time limit was available, but at the time of revocation, 16 subsection 4 time limit was not applicable, sir, not available, sir, 16 subsection 4. Then what should I do? Don't worry, for you 16 subsection 6 is coming to help. So 16 subsection 6 says you can take ITC for that period, the cancellation to revocation period, any returns, the time limit for availing ITC 16 subsection 4 time limit is over. Further, still if you can want, you can take ITC by filing those returns, the 3B, all that, by 30 days from the date of revocation order. 30 days, within 30 days from the date of revocation of cancellation, you can avail ITC. See, for example, I'll tell you, there is a company, Vivar Private Limited. They are not filing their returns continuously for 6 months. Because of that, the registration is cancelled. If you see from 1st Feb 2024 to 31st July 2024, 6 months continuously they did not file the return. So they got the notice, all that stuff, and registration finally cancelled on 10th September 2024. Okay, 10th September 2024. With effect from retrospective effect, 1st Feb 2024 itself, they have cancelled the registration. Now here what we have to see is, sir, what is the period of cancellation of registration? Sir, order of cancellation is given on 20th December, but it is cancelled from 1st Feb. So from 1st Feb, I am not able to file the returns. I am not able to file the returns. Now, sir, when I go for the revocation I got somewhere in 20th December. Sir, please understand, when I get the revocation on 20th December 2024, if you see, for me, I was not able to file returns from 1st Feb, correct? Because registration is cancelled from 1st Feb. So if you see, Feb and March 2024, the ITC belonging to those months, the time limit to avail ITC under section 16 subsection 4 was available. For me, ITC under 16 subsection 4 time limit is available at the time of cancelling my registration. So that 10th September they are cancelling the registration. During that time, I still had the chance to take ITC under 16 subsection 4. But at the time of revocation, if you see 20th December, by that time, for me, the time limit to avail ITC under 16 subsection 4 was not available. So simple, when the department was cancelled my registration, for me 16 subsection 4 time limit was applicable for Feb and March. I could have taken that if you have not cancelled my registration. But now you cancelled my registration, and at the time of revocation, if I see, after revocation time limit is over 16 subsection 4. So for Feb and March month, what should I do? You can take ITC by filing Feb and March month returns within 30 days from the date of revocation. The revocation is granted on 20th December. So from that 30 days, so 19th January 2025. So before that, by filing that return of Feb and March month, I can take ITC of Feb and March month 2024, even though 16 subsection 4 time limit is expired, I can go with 16 subsection 6. Okay, that is the point. Suppose, sir, coming to April 2024 to December 2024 returns also I have not filed. For that also I have not taken ITC still. At the time of cancellation of my registration, that 16 subsection 4 time limit is over. After revocation also, still 16 subsection 4 time limit is available for me. That is, this is coming in 24-25 financial year, no, 30th November 2025, and actual date of filing annual return of 24-25. Till that I have the time limit, no. So April to March, December 2024 returns, I can happily file accordingly, and I can take ITC. I need not see 16 subsection 6 itself. I will see 16 subsection 6, simple words, when at the time of cancellation 16 subsection 4 time limit is applicable, but at the time of revocation it is not applicable. In that case, I will go to 16 subsection 6. What 16 subsection 6 says? 16 subsection 6 says take ITC by filing the returns, pending returns, within 30 days from the date of revocation of cancellation. So this is the notes for that. Hope it is crystal clear for you. This is the new section and very, very, very important section for you for your May 2025 exams. So please be careful. So we are going through the next clarification here regarding ITC on availability in respect of demo vehicles. See, generally, I am a car dealer. I am purchasing cars and selling cars. So when I am purchasing cars and selling cars, I have certain demo vehicles. So certain cars are kept as demo vehicle for like test drive, etc., etc., all that. Whether I can take ITC on that or not is the first question. See now, if I am an authorized dealer where I am selling cars, sir, the dealer is selling the cars. Dealer sells the cars. So he will provide trial runs, demonstrate the features of the vehicles, all that stuff. For that, he will purchase the vehicles and he will use certain vehicles as demo vehicles. So there, ITC is not blocked. That means here ITC available. ITC available. Now, no sir, I am not using the cars what I have purchased for giving demo or trial, etc., etc., all the stuff to the customers, but I am using it for transportation of my staff, employees, management, etc., sir. Then ITC is not available, so ITC is blocked. Here ITC is blocked. Okay, this is second situation. The final situation, the interesting part here is, sir, what you are doing, you are not an authorized dealer who will sell the cars directly to the customer. You are just acting as an intermediary or an agent where the manufacturer of the cars directly will sell the cars to the customers, but you are acting as an agent to sell the cars and you will take some commission for that. What you are doing for providing your services as an agent, sir, for providing your services as a agent to provide marketing services, vehicle test drive services, all that stuff, where you are not directly involved in vehicle purchase and sale. In such cases, you are, as I told you, manufacturer will directly issue invoice directly to the customers. Okay. Now the point is, as an agent here, I am purchasing some demo vehicles, correct, for test drives, and after certain time period is over, I will sell them. Now I am buying the car for providing my services as an agent to promote the car, all the stuff. I am not engaged in further supply of said vehicles. Okay, who is selling the vehicles? Manufacturer is directly selling the vehicles to the customers. As I have already told you, invoice is directly raised by the manufacturer to the customer. In such cases, ITC is not available. Sorry. That means here, dealer is not actual seller of cars. Dealer is not actually the seller of cars, but he is an agent of manufacturer. Okay, so now, sir, whether this dealer is capitalizing the car, not capitalizing the car, all the stuff doesn't matter. He cannot take ITC because he is just providing service as an agent. He is not buying and selling the cars. Okay, so dealer is not buying the, better write down, dealer is not buying and selling the cars. So whether he's taking, capitalizing the point or not, all the stuff doesn't matter here. So ITC on demo vehicles does not depend on the capitalization. As you know, the exception in 17 subsection 5 is if you are engaged in further supply of such conveyances only, you can take ITC. Here you are not engaged in further supply of such conveyances, you cannot take ITC. No sir, as we have discussed in the first case, sir, I am the dealer, I am the authorized dealer where I will sell the cars also to the customers directly. For that purpose, I am buying the cars and selling the cars, and for that purpose, I made certain vehicles as demo vehicles or test drive vehicles, all that. I can take ITC happily because I am buying the cars and selling the cars. So there is the clarification with respect to that. Next one, if you see, that is related to the clarification with respect to time limit for availing ITC in case of RCM supplies, where RCM supplies are there and the recipient is required to raise tax invoice. The doubt is, what is the time limit to take ITC? Time limit to take ITC is section 16 subsection 4. But sir, in 16 subsection 4, they talk about the relevant financial year in which the invoice is raised. From that, you should see 30th November of the succeeding financial year or actual date of filing, annual date of the relevant financial year, correct? Now, in this case, which financial year I should take? Then the law says, see, when the recipient is required to raise tax invoice, the relevant financial year will be the financial year in which that invoice has been issued by the recipient under section 31 subsection 3 clause F. Simple. Just like supplier has to raise invoice, recipient has to raise invoice. And when recipient has to raise tax invoice, so what financial year he is raising, from that only you have to, the recipient has to calculate the time limit for availing ITC. So he has an obligation to raise tax invoice under section 31 time limit that he has to follow, and accordingly ITC should be taken. But sir, if there is any delay in issuance of such invoice because of there is late payment of tax also, then automatically the interest and penalty will come into picture under section 122. Okay, so simple. Recipient has to raise tax invoice and he has to pay GST under RCM. Then he should raise the tax invoice within section 31 time limit, and the time limit to take ITC on that is nothing but in which financial year he has raised invoice, succeeding financial year 30th November, or actual date of filing, annual date of the relevant financial year, whichever is earlier. So that is the point. That means what we are saying, you should raise invoice within section 31 time limit and take ITC accordingly. If you are not raising the tax invoice according to the time limits in section 31, then because of that late payment of tax happens, and because of that you should pay interest on the tax, as well as you are subjected to penalty, right? So that is what the concept, right? That is what this clarification all about. The next clarification is with respect to ITC on ducts and manholes used while constructing this optical fiber network. So in that case, in the construction of optical fiber cables or networks, sir, they are using ducts and manholes. On that, whether we can take ITC or not, in that department has clarified. Generally, plant and machinery, 17 subsection 5, you know, sir, plant and machinery is an exception, you can take ITC on that. So ducts and manholes will be considered as plant and machinery. They are not being specifically excluded from the definition of plant and machinery. That means ducts and manholes are plant and machinery. Ducts and manholes. Ducts and manholes are plant and machinery. So you can happily take ITC. You can happily take ITC. That is the concept. Okay. Right. So the next one is with respect to clarification in respect of entitlement of ITC by insurance companies on the expenses incurred for repair of motor vehicles in case of reimbursement mode of insurance claim settlement. Please understand, see, now, sir, I have a car and there is a small accident where I should change the silencer of the car or something, there should be some spare parts etc. to be changed or whatever it is. Now the point is, sir, there are some repairs and maintenance involved here, and this amount is borne by the insurance company. Now here the point is whether insurance company can take ITC of it, is what the point. If you remember 17 subsection 5, there is an exception where normally general insurance repairs and maintenance servicing or locked credits, but if it is general insurance company, they can take ITC. So sir, general insurance companies can take ITC of the repairs and maintenance taken for the vehicles. Now here the point is, sir, how they will provide this insurance. Now please understand, there are two modes. One is cashless, the other is reimbursement. What does it mean, sir? Cashless means, understand what happens, the repair services are done at network garages of insurance company, and the insurance company pays approved charges to the garage. Invoice are issued by garage in the insurance company's name. Now see, for example, my vehicle got damaged, all this stuff, I will drop the vehicle and that vehicle to the insurance company. Insurance company will take that vehicle to the garages which are having like the insurance companies with whom that garages are having MOUs, all that. So within their network garages, so they will do the repairs. So now in that what will happen, sir, whatever the repairs are there, that let us assume 1 lakh repairs, 80,000 is approved. 80,000 is approved and 20,000 excess cost. Now 20,000 I will pay to that garages, network garages. 80,000 directly insurance company will pay, full cashless processing, simple. That means insurance company will not take even 1 rupee from me. Okay, this is one way. The other way is the reimbursement. That means, sir, I will take the vehicle to a non-network garage with whom insurance company doesn't have any MOU, all that. Now I will pay the full amount whatever is there, and I will give the bill to the insurance company. Insurance company will do reimbursement to me. But here the interesting thing is, sir, the bill should be in the name of insurance company, then only insurance company can take ITC of that. Okay, so the garage issues the invoice in the insurance company's name without providing credit for repair cost. Okay, policy holders will pay it and take reimbursement from the insurance company. These are two methods here. So I hope you understood. One, there is repair and maintenance for my car. Sir, in both the cases, actually this point is for both. There should not be any line. So the same is applicable here also. We understand, sir, insurance companies, repairs and maintenance, whether they are doing cashless things or they are doing reimbursement to the customer, where customer will get the repairs and maintenance and claims reimbursement from the company. Both the cases, they are eligible for ITC under section 17 subsection 5. So blocked credit will not apply. There is an exception to blocked credit. So hope you are clear with this. Now the issue is actually, sir, as I told you, 1 lakh is the repair cost. 1 lakh is approved, 20,000 is excess. Correct? Sir, if at all, to what extent ITC is available to the insurer in case of two separate invoices by the garage for repair services, one to the insurance company for approved claim cost, another to the customer for any excess amount. So as I told you, 80,000 is to the garage and 20,000 excess amount to the customer. We have given the invoice. Now for the insurance company, ITC is available to insurance company only on the invoice issued to it. Subject, of course, the said amount is reimbursed to the customer. Please understand, that means insurance company can take ITC only on the 80,000 because that is the burden they are taking, correct? They are not taking the burden of entire 1 lakh. So that is the point. Okay, sir. So the garage fellow gave 80,000 invoice to insurance company, 20,000 to the customer. Insurance company can take ITC only on the 80,000. Okay, fine. The next thing, what is the extent of ITC available to the insurance company in case single invoice is issued by the garage covering the full amount for repairs and services, and the insurance company reimburses only the approved claim cost? Full 1 lakh, that fellow giving the invoice, garage fellow, to insurance company in the name of insurance company. Can insurance company take 1 lakh ITC fully? No, only 80,000 again. So ITC is available to the insurance company only to the extent the reimbursement is approved, okay, to the insured, not on the full amount, not on the full invoice value. This is another thing. So finally, what? Whether ITC is available to the insurer if invoice for vehicle repair is not in insurance company's name. Obviously, ITC is not available. You know, section 16 subsection 2 says, the invoice should be, you will be having a documentary evidence of invoice, and if that invoice is not in the name of insurance company, how will it get reflected in GST or 2B of insurance company? So it cannot take ITC. The insurance company cannot take ITC if the invoice is not in their name. Clear? So that is what the story here. Hope it is clear. A very good clarification again. So please make sure you are thorough with this. Mark it important. Okay, with this we are done with another clarification as well. So the next one, if you see, sir, if you remember, when we are going with valuation rules and when we are calculating the value of supply for the insurance premium paid for life insurances, all that stuff, sir, in the value of supply, we will exclude some portion when you're going through value of supply, all that stuff, sir. Even though the premium is paid 1 lakh rupees, from that, let us assume some 20,000, 30,000, 40,000, something or the other, based on valuation rules, we will remove some portion. Now the doubt is, should we reverse ITC because of this under rule 42 or 43? Was the doubt. Now there is a clarification regarding this. See, the clarification is on the requirement of reversal of ITC in respect of portion of the premium for life insurance policies which is not included in the taxable value. Understand, the premium paid in case of insurance policy, some portion of premium is not included in the taxable value. That is because of the valuation rules. This is neither a nil rated nor wholly exempt supply, and this is not a non-taxable supply. So you will not get a situation where rule 42 43 comes into picture and you need to reverse ITC, all that stuff will not arise. That is what the concept they are trying to tell. A very simple and small clarification. Simple. What is that? Sir, any insurance premium, whatever you are paying on life insurance, the value of supply, some portion of the amount we will deduct because of valuation rules. For that purpose, you need not reverse any ITC under rule 42 or 43. That is what the clarification. So the next amendment is with respect to registration chapters. Sir, registration for metal scrap dealers. Please understand, we have already seen metal scrap dealers are covered under RCM, correct? So because they are covered under RCM, there is no exemption for them from registration. Okay, so they are supposed to go for registration under section 22 or 24. That means, see, please understand, you are a metal scrap dealer. So to simplify this, like, let us see the notes. As I was writing the notes, So just mention here, refer the notes. So here let me just show you this. See, I'm a metal scrap dealer. I'm making sales. So the moment I start business, I will not take registration. You know, I can enjoy the threshold limits, all that stuff. So as long as I'm enjoying the threshold limits, or I'm not becoming liable for registration under section 22 subsection 22 or 24, whatever the sales I make, sale by an unregistered person, metal scrap. So RCM comes into picture, the recipient is liable to pay GST. After that, I will become liable for registration under section 22 or 24. I will take registration. So what I should do now? I should charge GST under forward charge and pay to the government. That is what the concept. So because I'm a RCM supplier, it doesn't mean that I can enjoy the relaxation of registration. No need to take registration like that. It is not there for metal scrap dealer only. So metal scrap dealer, as long as not liable for registration, unregistered, RCM. Once you become liable for registration, take registration and FCM. So that is what a nice amendment here, a very important one. So please be careful with this for your exams. So the next amendment, if you see, there is a mistake here in the heading. You can just ignore this heading, whatever has been given there. Clarification on ITC demo vehicles, all that. So here, this particular concept is all about, sir, we have added newly situations where your registration can be cancelled on suo motu. So for suo motu cancellation of registration, sir, new reasons are added here. What are these reasons? Nothing but, see, when you apply for revocation of cancellation of registration, they will revoke your cancellation, asking you to file all pending returns, correct? So all the pending returns should be filed within 30 days, from the date of order of revocation. Okay, so whatever the pending returns are there, once revocation order is given, sir, the revocation order is given means within 30 days you should file all the pending returns. If you have not filed the pending returns, then your registration is liable for cancellation. Proper officer has the right to cancel the registration. He gave you revocation believing you that you will file all the pending returns and now you will be a good boy. Still you are continuing the same thing. So they will not entertain this. Now the proper officer got again the power to cancel your registration. Okay, so that is what this amendment all about. New proviso, third proviso and fourth proviso are added below rule 23 sub rule 1. The next amendment is with respect to interest calculation, actually interest under section 50. So ignore the headings given there. Okay, so this is nothing but simple. You know, sir, when we are paying interest under section 50, when there is delay in filing the return and because of there is delay in payment of tax, you know, we will pay GST interest only on the net GST liability. For example, sir, there is delay in payment of tax, sir, because of delay in filing the return. The gross liability is, imagine, gross liability is 1 lakh, ITC 40,000. So we know generally we pay interest on 60,000. But imagine, sir, in the cash ledger, if in e-cash ledger, from the due date of filing this return till the actual date of filing and paying the tax, in the e-cash ledger, if the balance is 20,000 available, I repeat, in the e-cash ledger, if the balance is available from the due date till the date of actually payment of this tax, if that amount, any amount is available, that amount also you will minus and you will pay interest only on the balance. So here interest will come only on out of 1 lakh 40 61. So balance on 40,000 only, on 40, or let us assume for your clarity, let us say this e-cash ledger balance is 30,000. So now interest will come only on what? In 1 lakh, in e-credit ledger there is 40,000 and in e-cash ledger there is 30,000. So balance 30,000, interest will come only on, anyhow the number is coming to just confuse you. Okay, I'm just trying to avoid the confusion. 25,000 let us take. Okay, so I repeat, see, I'm just changing the numbers just to make sure some different number is coming so that you will not get confused when you are revising. Okay, so interest, see, 1 lakh is the liability, but you did not file the return on due date and you did not pay the taxes on time because of the delay in filing the return. So interest should be paid on what? Interest should be paid on gross liability minus e-credit ledger balance. That means 1 lakh minus 40,000 minus whatever the balance is there in e-cash ledger, okay, from the due date of filing that return till the actual date of payment of tax. Let us assume 25,000 e-cash ledger balance is there. That means 1 lakh minus 40,000, 60,000, 60,000 minus 25,000, sir, 35,000. On 35,000 you should be paying interest. Okay, so that is what the concept. So I repeat, Normally we know we will pay interest on net GST liability if there is any delay in filing the return because of the delay in payment of tax. So in that case, on net GST liability we will pay interest. Here we are adding one more point. If there is any balance in e-cash ledger, that also you will be reducing, and only on the remaining amount you need to pay interest. That is more than sufficient. So hope it is clear for you. The next amendment is with respect to the metal scrap dealers. We are seeing the metal scrap dealers. See, in RCM we have seen registration, we have seen, now we are seeing it in TCS. Sir, TDS, sorry. Sir, here, if you are a metal scrap dealer and you are selling that metal scrap dealer, you are a registered person to another registered person you are selling. Then the buyer who is buying the metal scrap from you, you are also registered, he is also registered. He has the obligation of deducting tax at source, so TDS from you. Okay, so you all know TDS 2%. Second. So TDS 2% you should deduct. Okay, so that is what the concept. Fine. Here one more interesting thing is, generally we know between section 51 entities, that means one public sector undertaking to another public sector undertaking, if they are making any supplies, TDS will not come into picture. But here that point will not apply. TDS is applicable even if the supply is between one metal scrap dealer to another metal scrap dealer. In all other cases, you know, in all other cases, TDS is not applicable if supply is between the persons covered under section 51. But here for metal scrap dealers, even though both of them are dealing with metal scrap, TDS provisions are still applicable, right? So that is another interesting point. So here, first of all, in TDS case, one new fellow has been added, and that new fellow is doing the supplies between themselves, that is metal scrap dealer to metal scrap dealer. Still TDS provisions are applicable. It is not like other section 51 entities. Okay, so that is the next amendment in this particular chapter, payment of tax and TDS. Next, the amendment is with respect to TCS. Simple amendment. The TCS rate, you know, actually it was earlier 1%, now it is made to 0.5%, that is 0.25 plus 0.25. Earlier it was 1%, 0.5 plus 0.5. Now it is no more applicable. Okay, so now TCS rate has been shifted to, or changed to, modified to, reduced to 0.5%. So that is the next amendment. The next one is with respect to returns chapter, the another amendment. Here, the GSTR 1A. Actually, the agenda of this GSTR 1A, you know, sir, how many returns are 1A, 2B, 3B, what is this? So don't feel like that. GSTR 1 is all about, sir, if at all you have done any mistakes in GSTR 1, that if you want to rectify, not waiting till the next GSTR 1, now itself you can rectify before filing GSTR 3B, so that the mistake, if at all it has an impact of reducing or increasing your liability, that can be auto populated in 3B, and accordingly for the immediate tax period 3B itself, all the mistakes will be closed. So that is the whole idea. Now that means what? To amend the details in GSTR 1, you should have filed GSTR 1. Without filing GSTR 1, you cannot file GSTR 1A. Okay, so not only that, sir, add or amend the details, but also you can report the missed out invoices, including whatever is declared in IFF. If at all anything missed out, you can just give in GSTR 1A. Okay. Now coming to the point. Sir, this is an optional facility. First of all, we should understand this is something optional, and once for a return period. See, understand, you cannot keep on filing 1A, keep on doing mistakes, keep on rectifying all that. Only once you can file GSTR 1A. Okay. And this is to amend the details of GSTR 1 of the current tax period only. So whatever the mistakes you did in June month GSTR 1, that mistakes can be rectified or amended through GSTR 1A of June month. May month, April month, all that stuff you cannot do with that in 1A. You can do it only in GSTR 1. Okay, that is next one. Next, the changes made through GSTR 1A will be reflected in the liability of GSTR 3B immediately for the same tax period. As I told you, in the same tax period itself, we can close the issue. Next, the ITC for the supplies declared or amended through GSTR 1A, this will be available to the customer when in the next month 2B, not in the same tax period 2B. That means June month 1 I made mistakes and I filed 1A. The details given in 1A will be available to the customer not in June 2B, it will be available in July 2B. Okay, so that is what the point. Is there any due date for filing GSTR 1A, sir? No, there is no due date at all, but this will be available for the taxpayers for filing only when the GSTR 1 on monthly basis is being filed, and from when it will open, from the due date of filing GSTR 1 or the actual date of filing, whichever is later. That means even if you have filed it before the due date also GSTR1, only after due date of GSTR1, that is 11th or 13th as the case may be, this will open. No sir, I am filing the GSTR1 itself on 15th, 16th. Then GSTR1A will open only after the 15th or 16th. So whichever is later, due date of 1 or actual date of filing, whichever is later, from that it will get open. Okay. And it will be available till when? It will be available till the date of filing the corresponding 3B of the same tax period. Okay. And as I told, liability will be auto populated in 3B. Simple one, no complications, nothing. If you are a quarterly return and monthly payment filer, taxpayer that is under QRMP scheme, if you are under QRMP scheme, if you are under QRMP scheme also the same thing, sir. After filing GSTR1 quarterly basis or the due date, whichever is later, this will be open, sir, till the actual date of 3B, sir. Whatever the details reported in GSTR1 as well as first and second month IFF also can be amended through GSTR1A, sir. No issues at all. Next. Sir, the only drawback here is, please understand the important point. If the recipient GST number should be changed, that cannot be done through GSTR1A. Sir, that shall be reported only through GSTR1 of the subsequent tax period. Okay. So change in recipient's GST IN can be done only through subsequent period GSTR1. You cannot do that by filing GSTR1A. Okay. Fine. So this point heading, actually this should come here. Sir, how do we report invoices? Reporting of invoices. Reporting of invoices in GSTR 1A. Let us do some coloring for this. Yes. Okay, so reporting of invoices in GSTR 1A. How do you do that? Sir, it is purely whether it is B2B supply. If it is B2B supply, you know invoice wise will give. Sir, if it is B2C supply, again interstate na, sorry, intrastate na, consolidated figure you can give, just like we have seen GSTR1 filing, same way. But intrastate, if it is intrastate, consolidated you can give. If it is interstate, like in GSTR1 you have seen B2C large invoices 2.5 lakhs, all that. So here, if it is greater than 1 lakh, if it is greater than 1 lakh itself, what you have to do? You should give invoice wise details. If it is less than or equal to 1 lakh, then consolidated, state wise, rate wise, if you are giving, more than sufficient. Just like GSTR1, but there B2C large concept we have 2.5 lakhs. Instead of that 2.5 lakhs, here we are having 1 lakh. Hope it is clear for you. So that is with respect to GSTR 1A. And the last amendment here is with respect to GSTR 4 due date. A very simple one. Due date of GSTR 4 is extended to, or sorry, modified to 30th June of succeeding financial year. Earlier it was 30th April. Earlier, if you remember, it was 30th April. Now they made it to 30th June. So that is another amendment, a simple one. So with this we are done with the amendments related to returns chapter. Again, a small amendment with respect to Rule 96A, time limit for export of services. See, understand, here the exporter of services, actually the exporter of services, what he has to do, he has to execute the bond or LUT before exporting. What he has to do in this bond or LUT, he has to undertake, he has to bind himself to pay the tax along with interest 18% if he is not receiving within 15 days after the expiry of 1 year, or as per the period may be allowed by FEMA, whichever is later from the date of issue of invoice. The export proceeds, the payment for such services is not received by him in convertible foreign exchange or Indian rupees, wherever permitted by RBI. That means the exporter of service, once he exports the service, he should receive the consideration for that within like 1 year, or as maybe like 1 year from the date of issuance of invoice, or as the time may be permitted by FEMA, whichever is later. But if he doesn't do that, within 15 days, he should pay the tax along with interest 18%. So that is what the bond or LUT has to undertake when he is exporting the services. Before exporting, he has to sign this. Okay, that is another one, right? A small amendment here. In the refund chapter, if you see, the next refund is actually one small point here. Sir, a new case for refund is added here. That is nothing but refund of additional IGST paid due to upward revision of price subsequent to exports, on which refund of IGST paid at the time of export was already sanctioned. As you know already, like when we make exports, we can pay taxes and we can claim refund. Now after exportation, the price has been revised upward and the price is increased, so the GST liability is increased and the exporter is also paying GST. So later on, what that additional IGST whatever he has paid, he can claim refund. That is what the concept. So refund of additional IGST paid is available because of upward revision of price, because of upward revision of price after the exports. A small point. Okay, fine. And next one is with respect to clarification on rule 96A. See here, the interesting part is, actually, sir, when exports are happening, sir, if you are exporting goods, I am allowing you to export the goods without payment of tax, or I am allowing you to export the services without payment of tax, with a condition that you should export the goods within 3 months. That means the goods should leave India within 3 months. Okay. So that is one condition from the date of invoice. Or if it is a service, you should have realized the consideration within 1 year from the date of invoice. If that is not the case, if that is not happening, sir, what will be done? You have claimed that benefit of not paying taxes. No. So we will make you to pay. That means if you are not exporting the goods within 3 months, or you are not receiving the payment within 1 year, we will make you to pay the tax. So the payment of IGST should be done. Sometimes what exporters will do, exporters will voluntarily pay this. So exporters are voluntarily paying this because of not fulfilling the condition. Now what happens, sir, there is a doubt here. Sir, subsequently, like later on, okay, we paid voluntarily IGST, all that stuff, and now, sir, subsequent to export of said goods or the realization of payments in case of services, whether the exporters are entitled to claim refund of unutilized ITC as well as the refund of IGST paid and interest paid earlier. So simple here, please understand, the exporter violated the condition. Sir, because he violated the condition, sir, what he did, he has paid IGST on exports. Again, on that he has paid interest also. And one more thing here, sir, there is unutilized ITC balance. Unutilized ITC balance. Here what we are saying now, see, because you have violated the conditions, we made you to pay the IGST amount on the exports. On the invoice you are supposed to pay. Okay, because you have not exported the goods, you have raised the invoice, you pay the IGST. Later on you may export the goods, or you have exported the services within 1 year, you have not received the payment, but I made you to export the service. Understand, I made you to export the service without payment of IGST. Then you should have received consideration within 1 year. You have not received. Now you pay IGST. You pay IGST on that export, and also you pay interest. Okay. Later on, suppose after 1.5 years, if you have received payment, now you are coming and saying, Vishnu sir, yes, I have received the payment for the export I have made. Can I claim refund of unutilized ITC balance? Yes, you can claim refund of unutilized ITC balance. Refund is available. Sir, not only that I have paid IGST on exports, no sir, this one can I claim refund, sir? Please sir. Yes, that is also available, no problem. Sir, what about interest, sir? This one can I claim refund, sir? That refund not available, sorry. That means you have violated some conditions, and when I am allowing you to export goods or services without payment of tax, you should satisfy the condition. You have not satisfied the condition, you have paid IGST. Later on in future, if you satisfy the condition, I mean later on that goods have exported or the payment has been realized, later on in future, I will give you ITC, whatever you have paid as IGST on exports, I also refund. I will give you unutilized ITC balance also as refund. But don't ask me interest whatever you have paid as refund. Okay, so that is what the concept here. Clear? So that is the clarification with respect to rule 96A. Hope it is clear for you. Again, this is a very small amendment, not that greatly relevant, no issues. Sir, generally, refund, for applying refund, government has the power to notify people under section 55 who are eligible for refund of the taxes paid on their purchases. Recently, they have added canteen stores department under Ministry of Defense under this category. So these people also can now claim refund of the GST paid, refund in prescribed form, filed every quarter in GST RFD 01, all the stuff. So refund of taxes shall be available if that inward supplies are against a tax invoice and they have furnished their GSTR 1 and 3B properly, and name and GSTN of the canteen stores department is there on the invoices, then they can claim refund. Okay, so these people can apply for refund of the purchases made by them, which are subsequently used to supply the goods to unit run canteens of the same department or to any authorized customers. Simple refund of taxes paid on their purchases they can claim as refund. Sorry, refund of GST paid on their purchases is available. Okay, so a small amendment, nothing to worry much. So with this we are done with amendments of refund chapter. Next chapter coming with appeals and revisions. Please understand the small amendments here and there. Sir, the cases related to anti-profiteering clause now can be heard even by GST 80. Sir, that too only principal bench. Only principal bench. So anti-profiteering clause, you know, because of the GST now, because you are getting ITC benefit, all that stuff, you should pass on the benefit to the customer. That means there should be reduction in prices, all that. So such cases now can be heard by GST 80 also, but only by the principal bench. And next amendment is, sir, appeals to appellate tribunal can be filed by the taxpayer or department, any of them, manually also, not only electronically but also manually can be filed. Next, sir, the minimum fees, very important one of this one. So the minimum fees for appeal under GST with the GST appellate tribunal will be 5,000 if the demand involved, if there is any demand of tax, etc., is involved. Sir, if there is no demand involved, flat 5,000 is the fees, sir. If there is no demand involved, please understand, if demand is involved for any tax or interest, all the stuff, 1,000 rupees per every lakh, 1,000 rupees per every lakh of the amount involved, maximum 25,000, very important, but minimum fees is 5,000. That means demand amount is 4 lakhs, now fees should be 4,000. No, fees is 5,000. Am I clear? I repeat, if demand amount, anything tax demand is there, you got notice for 4 lakhs and you want to go for an appeal, sir, appeal 4 lakhs, each lakh 1,000 rupees, so 4 lakhs means 4,000 should be the fees. No, sir, minimum fees you should pay 5,000, but maximum fees 25 lakhs. If demand amount is 100 crores, then the appeal fees is just 25,000. Okay, now sir, there is no demand itself, sir, in that actually the order what they have given, so that is something different one. So in such case, what is the, I want to go for an appeal against the order passed by the department where there is no demand amount but something related to any provision or etc. In such case, flat fees of 5,000 should be paid for that appeal. Okay, so that is what the point. So next, coming to the next one, sir, this is with respect to filing cross objects, memorandum of cross objects when you are going for an appeal. So with respect to this amendment, actually, see here what we are going to see now. We are going to see the common provisions for appeal, whether the appeal is by taxpayer or by the department. Okay, so generally when appeal is filed, if the taxpayer is filing the appeal, the department has to file the cross objections, and if the department is filing the appeal, the taxpayer has to file the cross objections. So this memorandum of cross objections can also be filed electronically or manually, just like how we have discussed here. Now the appeal to appellate tribunal can be filed by the taxpayer or department even manually. The same way memorandum of cross objections also can be filed manually. That is number one. Number two, sir, whether the appeal is filed by the taxpayer or the department, please understand, date of filing appeal is very important for us, because even the completion of this proceedings, when the appeal should be disposed, the recommended time limit is nothing but 1 year from the date of filing appeal. When the law will consider that I have filed an appeal, no matter whether it is a taxpayer filing the appeal or the department filing the appeal, when we will consider that appeal has been filed, see, there is an order passed by the department. Against that, either department is only going for appeal or taxpayer is going for appeal. Okay, that order against which you are appealing is already uploaded in the GST common portal. Okay, against that you are filing an appeal. Then when you have filed an appeal, they gave you the provisional acknowledgement, right? That date itself will be treated as date of filing the appeal. No, sir, that appeal against which I am going for an the order against which I am going for an appeal, that order copy is not uploaded in the common portal, and me, either the taxpayer or the department, the person who is filing the appeal is uploading the self-certified copy within 7 days, from the date of such order. Okay, sorry, within the 7 days from the date of filing the appeal. Okay, then again date of issue of provisional acknowledgement for filing the appeal, that itself will be treated as date of filing the appeal. No, sir, that order is not uploaded in the common portal. The person who is filing the appeal is also not uploading the certified copy within 7 days. After 7 days only he is uploading. Then date of uploading such self-certified copy of order itself will be treated as date of filing appeal. I repeat, with respect to date of filing appeal, when I can say that appeal has been filed, the date will be, if this is common for both taxpayer as well as department filing the appeal. Okay, so now the point is, sir, if the appeal you are filing is against an order and that order is already uploaded in the portal, then you will get provisional acknowledgement after filing the appeal. That itself will be treated as date of filing the appeal. No sir, I did against the order against which I am going for an appeal, that order is not uploaded in the common portal, sir, yet. Then whoever is filing the appeal, that fellow has to take the copy, Xerox copy of that, self-certify it, and should give to the department, upload that within 7 days. Then also date of provisional acknowledgement will be read as date of filing appeal. If he is uploading this self-certified copy, see, it is not getting updated in the portal also, and you are also not submitting the self-certified copy, and 7 days over. In such case, what is the date of filing the appeal? The date of uploading that self-certified copy of the order will be treated as date of filing the appeal. So this is another amendment. Next, sir, can I withdraw the appeal? With respect to withdrawal of the appeal also, the common provision says that the appellant can withdraw the appeal, sir, and that can be filed. Ignore about the form numbers, all that, but that should be done before the issue of order under appeal. Okay, before the issuance of order under appeal. So you went for an appeal before the order is passed by the adjudicating authority or appellate tribunal. Here, sir, you can withdraw. And if the final acknowledgement for the appeal has been issued under GST appeal 02 already, the appellate tribunal should approve your withdrawal, and they will approve it within 15 days. Okay, so I repeat, if you are going for withdrawal of the appeal, you can do that anytime before the order is passed. But you are withdrawing the appeal after the final acknowledgement. We have discussed so long provisional acknowledgement, right? After the final acknowledgement is granted to you in GST appeal 02, after that, if you are withdrawing the appeal, then appellate tribunal should approve that, and they will generally approve it within 15 days from the date of filing the withdrawal application. So that is what with respect to that common points related to appeal by taxpayer or department. Next one, what is the next amendment? If you look at the next amendment, sir, it is with respect to non-establishment of GST. Because of that, what happens, you know, GST law has come, but GST appellate tribunals have not been set up. So now any order of adjudicating authority, the department order, we want to appeal, file an appeal, there is no GST appellate tribunal. So here what should we do? Now please understand, normally when you are going for an appeal, maybe with adjudicating authority or GST appellate tribunal, you know there is mandatory pre-deposit limits. Please be careful with that. Please learn that. You are going for tribunal, then the pre-deposit amount should be 20% of the tax involved, or 100 crores, 50 plus 50 under CGST, SGST. So whichever is higher, so that much you have to proceed, correct? So that mandatory pre-deposit amount, here what they are saying, because tribunal is not set up, any adjudicating authority's order, if you want to go for an appeal, okay, then what you should do, you can pre-deposit the amount in the prescribed manner, all that stuff, and you should give an undertaking that when tomorrow in future GST appellate tribunal is set up, I will go for an appeal. Like that, you have to take an undertaking against the order of the adjudicating authority. Is there no, you are going for an appeal, I mean, you decided to go for an appeal. I decided to go for an appeal, sir, but GST appellate tribunal is not there, sir, there. So once it comes into operation, you will go for an appeal, no? Yes, sir. Please agree for that and pay the pre-deposit now only. Pay the pre-deposit now only. So all the recovery proceedings for the remaining amount will be stayed. Okay, because GST appellate tribunal we have not set up, so it is our mistake. Nothing to worry, right? So that is what next amendment, right? Hope it is clear for you. Now the next one is with respect to monetary limit for filing an appeal. See, department is there. Department wants to file an appeal against any order which it did not like. Maybe the order given by the adjudicating authority, the department only, or it is given by GST appellate tribunal or High Court or Supreme Court. So now when the department wants to knock the doors of these people, that is GST appellate tribunal or High Court or Supreme Court, if department wants to knock the door, if department wants to file an appeal against the order of adjudicating authority or against the order of GST 80 to High Court or against the order of High Court to Supreme Court, if the department wants to file an appeal, then the amount involved should be at least 20 lakhs. Then only you can go and file an appeal in GST 80. GST 80 gave an order, you want to file an appeal in High Court, at least the amount should be like 1 crore in question. Then only you can go and file an appeal in High Court. Or if there is a High Court order which you want to challenge in Supreme Court, at least the money should be 2 crores involved. Then only you can file an appeal against the order. Otherwise, you cannot. And they have given some silly clarification or silly explanation here for that. Amount involved means how much should be involved. Whatever the amount is in dispute there, that much if you calculate, it should be 20 lakhs or it should be 1 crore or 2 crores. For that they gave some silly explanation. So you can straight away happily ignore. I also gave with over excitement that table, otherwise not required. Now here one interesting point is, sir, monetary limit as I was speaking shall be applied on the disputed amount of tax, interest, penalty, late fees as the case may be, in respect of which appeal or application is contemplated to be filed in a case. So in any order, whatever the amount is involved, it can be with respect to tax, interest, penalty, late fees, all those stuff that should be taken into consideration. Suppose, sir, if I have given a single order, a composite order, which is disposing multiple appeals or demand notices, then in that case, sir, the monetary limit will be applicable on the total amount like tax, interest, penalty, late fees as the case may be, and not on the amount involved in individual appeal or demand notice. That means multiple demand notices or multiple appeals are being disposed with one single order. In that order as a whole, how much money is involved, that much you should calculate for that 20 lakh, 1 crore, 2 crore limit, but not single appeal wise, demand notice wise. You should not check. The entire order is passed for multiple appeals or multiple demand notices, so you should consider the entire order, not individually. That is another interesting fact. And one more important thing is, sir, just because we are falling within the monetary limits and we are not having power to go for an appeal, it doesn't mean that any other case with the same facts and same circumstances, all that stuff, in any other case, if monetary limit exceeds, we can proceed. It doesn't mean that, sir, due to non-filing of appeal due to the above monetary limits does not preclude the officer from filing the appeal in any other case involving the same facts and exceeding the monetary limits, or if it involves question of law. Sir, if it involves question of law or if it involves like exceeding the monetary limit, all that, even with the same facts and circumstances, we can go for an appeal. You cannot say, sir, in some other situation you did not go for an appeal for the same type of order. You cannot say that way. I did not go there because I have certain restrictions and limitations. That is why I did not go. Now because I am having full power, because either there is question of law or there is exceeding in the monetary limits, all that stuff. So now I can happily go for an appeal. You cannot stop me. Now another interesting and important point is that these monetary limits of 20 lakh, 1 crore, 2 crores are not applicable. Where they are not applicable, sir? They are not applicable to, suppose if any GST, if any order is there where the GST law provision itself is held ultra vires to the constitution, or any rules regulations under GST law held ultra vires to the parent act. That means any provisions of CGST act held ultra vires the CGST act, or any order, instruction, notification, circular by government or CBIC held ultra vires the GST law or rules. That means GST law ultra vires the constitution. Any rules or regulations being declared as ultra vires the particular parent act, or any orders or instructions, notification, circulars issued by CBIC or government is held as ultra vires the GST law or rules, or any matters related to valuation, classification, refunds, place of supply, or any other issue recurring in nature which is involving the interpretation of certain provisions, there also no monetary limit applicable. Any strictures or adverse comments made on the government or department or officers, or any cost is imposed on the government, department or officers in such cases, or sir, it is necessary to contest, sir, in the nature of justice or revenue, or for the interest of justice or revenue, sir, it is necessary to contest, then they can do that without the monetary limits taking into consideration. So that is the amendment with respect to monetary limits to file an appeal against the orders with the GSTT or with High Court or with Supreme Court by the department. Next is small point where we have discussed regarding anti-profiteering clause. The anti-profiteering cases, now The authority to examine that cases includes GST 80, especially the principal bench only, but any cases will not be accepted from 1st April 2025 with respect to anti-profiteering clause. So anything, if you want to complain to GST 80, of course now it is not there, or the proper authority, prescribed authority with respect to anti-profiteering, that will not be available after or from 1st April 2025. So with 31st March 2025, all anti-profiteering complaints are done and dusted, will be closed. So the last exemption here with respect to see, whenever we are exporting the goods by taking some benefits with respect to duty drawback, or exporting them without payment of taxes, or by paying taxes and then taking the refund, all that stuff, or sir, when you are importing the goods, you are exporting them for repairs and again re-importing back. In these cases, if you remember section 20 in the first chapter of customs, levy and exemptions, or levy and exemptions, section 20, it says that the time limit for re-importation was earlier 3 years, now they have modified it to 5 years. It can be further extended to 2 years. But if it is exports to Bhutan, the time limit is 7 years and can be extended by 3 years later on. If the goods are exported under DEC or Advanced Authorization, DFIA, EPCG, DEPP, any other scheme of Chapter 4 of FTP 2023, the time limit is 1 year and can be extended up to 1 year. So this is the time limit for importation of those things for claiming the concessions under customs. Okay, so this is what all about the amendments, and this is the last amendment we are done with. So students, I hope you have enjoyed this session, and here please understand, I will also be uploading, number one, sir, these amendments one day before the exam to revise, so a 15 minutes, a small reel kind of thing, a quick revision video of amendments I will be uploading. So for that, you stay tuned to this channel. Number two, regularly as the time is being permitted, whatever it is, I am uploading quick revision videos of all chapters. So that also I am doing. So please make sure you are taking the use of that, and any doubts whatsoever you are having, you can just approach me through Instagram, CA Vishnuvardhan, for all your IDT doubts with respect to your CA final exam. So hope you have enjoyed this video. Please make sure you are giving your 100% efforts and enjoy your preparation. That is important actually for your exams. So from my end, wishing you all the very best and all success. See you all as chartered accountants very soon after this May 2025 exams. Wishing you all the best once again. This is your Mr. GST signing off. Jai Hind.